The recording started and take it from there. Yeah, Ethereum absolutely just sniped everybody out that entered late. Okay, so let me go live. Let me know if you guys can see this. Yeah, okay, I'll make sure the recording's on proper. Yeah, okay. All good, let's get started then. So, first of all, before we even look at anything else, let's look at Dixie. Let's look at USDT dominance and we'll take it from there.
Hey, good afternoon, bro.
Yeah, afternoon, brother. How you doing, man?
Yeah, doing good, man. Just catching up on the charts. Really, was expecting Asia to sell last night, and
Yeah.
unfortunately missed London session this morning. Woke up late, but that would have been nice for some longs.
Yeah, bro. I missed the London session as well. I had some scalp shorts open yesterday night, but
Nice.
yeah,
It's the time to do so, right? Like if you
yeah,
think about it, say for example, we've rallied throughout the day, right? You're gonna have outflows from people taking profits, and then you're also gonna have outflows from Asia selling, right? So combined, you're obviously gonna get a sell-off.
yeah,
Um,
yeah,
it's quite predictable.
yeah, for sure, bro. Plus, it's I think people get into this habit of thinking, you're gonna get a straight up V-shaped recovery that's just gonna take you back to all-time highs, and unless what you have is a pure like futures driven dump, which in our case it
Mm.
wasn't because everything was being sold off at once. um, you're not going to get that V-shaped recovery straight away. You're probably going to get some chop. The lows are probably going to get revisited at some point before you actually like go up again. And we know BTC likes to do this every single time we've had these major capitulation events. There's been at least one Burj Khalifa on BTC. So,
Yeah.
um, but yeah, man, let's take a look. Okay, let's go to Dixie. Take it bit by bit. So this was a crazy week on Dixie as well. So Dixie, from where we looked at it last time, which is we were looking at, okay, does Dixie confirm a distributive structure going into this white box, right? That's what we were looking at. We did the bounce, we went to the white box, and we didn't actually stay underneath this, as we can see from yesterday's candle. We went all the way up over here, straight back to the bigger white box above, right? The main resistance area we have between 109,623 and 110,114 in confluence with that the 618, right? The downtrending fifth speed resistance band 618 for Dixie. That is where you went back to. So that distributive argument has gone out the window, right? That structure has kind of completely ruined it. By the time the candle body closed, you could make an argument for okay, yeah, still distributed, but then we're not seeing the exact same follow through that we'd want to see following the type of price action that we've had, especially yesterday. So distributed around here, that's not no longer an argument for Dixie, right? So the next area I'll be looking at is this gray box over here. Why? Because we have an area where sellers were in control, we have manipulation above, and we have confirmation still that sellers are in control of this area. So as long as we keep basing underneath this level, then this is the next zone basically where you do not want Dixie breaking above. If you want, let's say, if you're looking for that risk on environment, right? You don't want Dixie breaking above this and then going towards like 111, higher towards 113.14. That's where your next diagonal is. These targets only come into play if you do something like this, exactly like we've been doing here. Go above, start compressing in this area, and then actually by the time the compression is finished, buyers have taken control, and you're starting to see closes above the mid of this zone. Right? If that happens, then the next buy cup is going to go towards 111, and then the more likely area with more confluence is 113 to 114. But for now, that rejection was a beautiful piece of rejection in terms of an argument for why, uh, as long as this structure doesn't get invalidated now, risk on is still in the table. Right? As long as this structure doesn't get invalidated, you have a high, you have a lower high at the same area, and we just need to confirm this level to be resistance still and not break above it. I.e., what was once resistance, this is just deviation. This is just deviation is once again resistance. That is what we're watching for now. Either we get that and we go lower, or you go here and you flip higher, right? Those are your two cases as long as you're above this white box. If you get below this white box, I'll be looking to target the white line again, down over here. That's your range. No need to overcomplicate it on Dixie. Just if this, then that. Otherwise, if this, then that. That's the two scenarios you're looking for. USDT dominance, right? So this is the more interesting one. 4.94% got tapped. So I went over this in my YouTube video day before yesterday. But the thing we talked about last week and the stream before that as well, and for a while now, basically we were talking about, okay, so the line of best fit for the USDT dominance chart is right over here, right? So the reason this chart has been marked out this way is because this zone here is where you can see is let's say it's the most reactive. That's where the most taps have
Yeah,
happened.
so what's that on the weekly for the USDT dominance trend line?
Yeah, yeah, brother, on the weekly.
Yeah, yeah. We're just tapping it right now. We're just there.
Yeah, yeah, exactly, bro. So this is the same area we've been saying is where USDT has been most reactive, right, throughout history. You can see anytime you've come to this area, you've had insane bounces, insane bounces. So that is why when we were above it, the first state of affairs we were talking about is, okay, we need to get below and confirm below this blue line, or this blue box rather, let's say, right? Because you want confirmation now that this over time is no longer support, but rather turning into resistance. That is what we're getting right now, right? We've broken below that. After you broke below wherever you've gone to, this is what I call your range extreme in terms of diagonals, right? So you have one tap, you have a second tap. For me, that is two valid taps to project a line that can be reactive to the future from. You're only going to have, in terms of diagonals, right, less support once you actually get below this level, right? Because you can see in terms of historical price action, this is telling you a trend that's still going to be reactive in the future as we go to this area. So once you lost this blue line, you now have this red line to contend with, right? So the reason we've been chopping is because, yes, you've lost the area that is most reactive, right? You've lost the actual most reactive area, but you've not yet lost the actual range extreme, right? You've lost the most reactive area here, but you've not lost that range extreme. So the scenario we've been playing with for the last couple of months is we've been saying, okay, as long as you're below this, right, we cannot have a thesis for why we should be completely bearish, right? Because at the end of the day, you've lost that reactive zone. But as long as you do not lose this, you also do not have an argument for why you should be full on, like, all chips on the table, just completely risk on. Because if this leads to bounces, then of course you're not going to get that breakdown that you're going to correlate with that euphoric move, right? So the thing we've been saying so far is, as long as you are sandwiched in between this zone, this is a chop zone, right? Neither side is in control as long as you are chopping in between this. Every time you get to the lows, if buyers defend this, that just means that USDT dominance isn't going to go lower, right? Meaning that you're not going to get that big spending of USDT. That's likely, that's what you need to push these cryptos, Bitcoin, Ethereum, whatever it is you're looking at, to the high prices, right? But as long as you don't accept back above this, that also shows you that buyers aren't relenting either when it comes to crypto. That means anytime you get to important support, get to range lows, buyers are going to step in, because now USDT dominance doesn't have a chance to go higher, right? So for the last few months, what we've been saying is, as long as you're in between this and neither side shows an edge, you are simply in a chopping slash ranging market. And that is what we've had so far. Because if you look at this range and then you just quickly go over to Bitcoin, you will notice nothing has happened on Bitcoin, right? You are just ranging. No serious damage has been done to this chart. The lows haven't been taken, the highs haven't been taken, nothing's been breached, right? You're just going sideways.
Yeah, literally. But although that, it was still one of the largest liquidation events, which is pretty crazy.
Yeah, yeah, exactly. For
From
seeing,
such bullshit news, right? Like I get it, a tariff war, okay, it's extreme, but I think it was quite propagated and done on purpose, to be honest. The timing with it being at the end of the month,
yeah,
and then after, they announced they're delaying it for a month, and yeah, as you said, market structure across the timeline is still bullish. Nothing that important has been broken yet,
yeah.
but it was definitely a mass liquidation event.
Yeah, exactly. But yesterday, that was one of those, like, oh shit, what's happening? Like, genuinely, like, even if you're experienced, you're gonna be looking at that with a bit of concern, like, oh fuck, what is actually going on? Kind of event. It
Mm.
was wild. But so this area, we were talking about this last stream. You have your higher time frame. You can go to the 3 months. You can go to the 6 months even. Right. This is 6 months. Very high time frame. You have your biannual. Uh, you have your biannual support resistance zone right over here, right? So this, for me, I've just marked out the seller zone on the 6 months area where sellers were in control before. You broke above, and this is your attempted retest for now, which is not successful, which is what you want to see if you risk on, right? Same thing. We've been saying, okay, so you came down, you've chopped, you've broken below that 6 month zone, right? So you've got the breakdown. this so far is a bearish retest of this breakdown. Okay, that is what we were talking about. This fair value gap has been filled, right? The bearish fair value gap. What was once resistance has confirmed to be resistance again. And the mid of the 6-month level, the 6-month seller zone, 4.94%, you've gone and you've tapped it. And this is a scenario I was describing in last week's stream, right? So it's in that YouTube video. If you look at last week's stream, we were saying, even if you go up here, as long as you reject from this general area, right? This is where your next big retest is going to be for USDT dominance. As long as you reject from here, there is nothing to be concerned about, because this shows an attempt, right? According to just this chart for now, this shows an attempt from buyers to go back and actually, like, you know, trade at these levels, right? If you're looking at this as a normal chart, this is an attempt from buyers to break into this range again. And that is an extremely strong reaction from the sellers. Basically, in terms of price action, what it is telling you, okay, supply is still very, very prominent in this area, right? And now, because of the inverse correlation, we know if this is bearish, if there's supply here for USDT dominance, then that's good, because we're saying, okay, well, if this is resistance, then as long as this remains resistance, you're looking for that move back down in the future. And we know, because of the inverse correlation, any move downs on this, we're going to correlate to moves up in our normal crypto markets. Right, so we've retested this, and for now that is extremely bearish retest. We could get one more move up. There is a fair value gap here on a slightly higher time frame. Is it higher or lower? One sec. I think it's the daily. Yeah, we have a daily fair value gap. We could still go in, like, chop rate the highs, but as long as you do not accept above this level on the higher time frame, like the weekly and above, you're completely fine. Okay, what you do not want to see, like I've said many times, is this, right? You don't want to see this, and then you start accepting above the mid, confirming above this, because then I think you actually have a deeper pullback. Maybe tap this resistance zone here again before actually getting the move down. But this is going to hinge entirely on, do you go and do you actually flip this into support, right? That's it. And for now, that is not the case. As you can see, we're still rejecting, right? The lows, the 6-month low, we're still rejecting. We're still below there. So this is good for now, right? The range highs have been entirely swept. We could go fill the wick. I don't care, as long as, like I said, on the higher time frame, you do not accept above the blue box / the red line, and definitely not above 4.94%. So that's USDT dominance. What else do we look at? Bitcoin dominance, right? So let's take a look at this. So this was a chart I put down just before we actually got that spike up on Bitcoin dominance. Just before we got that liquidation event. Put this in crypto chat. We had a XABCD, right? XABC at the point. So I saw, okay, this was basically a 786. Not an exact one, but that's within the allowed parameters, right? You have nearly a 618 here. So this is basically lining up to be a really nice butterfly, which is why this target was put down. Right? I wasn't expecting it to get hit, like, you know, I was expecting it to get hit, but not so soon. Literally happened the same day because of that liquidation. But we hit a bearish harmonic target, right? And we've had a reaction of it for now. You could get a type 2 return towards this area. If you do that, I do not care if you breach this high. I just don't want us to actually trade above 64.75% on Bitcoin dominance. Okay, that is, for me, in terms of what I've got in terms of just, like, you know, key levels, if you get above 64.75%, historically speaking, there's not much stopping you until, like, you know, 67, and then pretty much straight up into 72, right? There's not much in terms of resistance, because above this, it's all just big candles up, right? So I do not want us to get above 64.75%. Now, we know it's a Bitcoin heavy market. We can't say for certainty that that's not going to pass out, but even if we do get one more spike up for a type 2 retest of this W shape, right, I want to see, even if we get here, rate this, I want to see distributive structure coming over here, and then, you know, get the breakdown back down. I don't want to see, like, you know, acceptance above 64.75. That's going to be even harsher on alts, right? Especially if you get above here and then we get any more, like, you know, of these bogus liquidation events. The higher this goes, the nastier the alt flushes are going to be. So that's the reason I do not want to get above 64.75%. But for now, the target above us is 62.51, right? We've got 62.51. Let's see what happens at this particular area here. We have the support resistance zone. I've got that marked out in this box, right? Historically speaking, as long as we do not get above this, we should be fine. Even if we get above, we want it to be wicks, right? We don't want candle body closes above this level, nothing like that. We want it to be wicks with, like, you know, strong rejections from this area. But that is a, you know, you put a high low in again, and then you just, the W shape took you higher, right? That was it. But now I'm hoping Bitcoin dominance tops out somewhere around this area. It's a hope, of course, right? Doesn't mean it's going to happen, but this would be an extremely nice area for us to top out. Above this, like, we can't be surprised if we do actually tag 72% at some point. That's if we accept above 64.75%. Okay. And if you do see that, please be very wary of having serious altcoin exposure. Okay, because if you have bullish structure coming in here and you're all in on altcoins, like you saw what happened to, like, you know, you saw how many people got liquidated, so how much got liquidated off the crypto markets when Bitcoin just did this, right? If you're trying to play altcoins and there's chop when Bitcoin dominance is ranging in this area, that's going to be extremely hard to deal with. Okay, so that's Bitcoin dominance. Let's take a look. Ethereum dominance, not going to look at that yet. Total, right? So we finally got that retest I was talking about on Total as well, right? So that gray zone, this here on the screen, that gray zone was an area marked out because this is basically your previous all-time highs, and on top of being your previous all-time highs, this is also the area where you have your actual significant price action, right? So if we were to take a look at this on something like where was it, the monthly, right? This is where your macro read of the seller zone is. So this is the total area on the monthly at the peak where sellers were in control, right? On top of that, we also have the area where buyers were in control. Sorry, sellers were in control on the weekly, right? So both weekly and monthly seller zones are in this area. Sellers were in control of this area on the weekly, on the monthly, in their previous all-time highs in the past, right? So we had our yearly seller zone, of course. Let's ignore that for now, right? We know we had our ABCD structure going in here. We know where all-time high is. So what we were saying before, right? I was saying, as long as you have candle body closes above this, right, above all-time highs, it doesn't matter. The scenario we talked about, even in last week's stream, we said, if Total 1 were to drop even lower, it doesn't matter, right? As long as any visit you get to this area doesn't end up breaking the structure, right? In this case, nothing's happened. You went down, you confirmed, okay, well, there's still demand for Total 1 in this area, and then you went back up. That's even if you were to go lower, you know, go even lower than the mid, it wouldn't matter, right? What you don't want to see, the only time you would be actually worried about this chart, like we've talked about before, is if you got the breakdown and there wasn't any follow through from buyers, right? Let's say you close below and then you go up and then you see, okay, well, this is now turning into resistance. Right, let's say you're turning the monthly mid into resistance, the weekly mid into resistance, getting candle body closes below. That is what should be worrying, right? This is not worrying. This is not worrying. This is simply a retest. That's all it is, right? We've been talking about this ever since we broke above, right? We've been talking about, okay, we've hit the ABCDs, we broke above. It doesn't matter if you come into the zone as long as buyers retain control of this zone. And buyers are definitely retaining control so far, right? That is extremely bullish reaction we've had to this area. Can we revisit this? Of course, right? We can revisit these wicks. We can revisit it even lower, right? Maybe we even go and tap the 2021 12-month seller zone mid. Again, it doesn't matter as long as you do not go and start turning this area into resistance. If you do that, you will have distributive structure on Total 1, right? And that is not something you want to be swing long heavy on, simply for the potential that, okay, if that distributive structure plays out, you know, you wouldn't be surprised if you got 2.19 trillion, or even if you went and challenged the lows, went back towards the low of the parallel channel, right? Because, okay, you rejected the highs, you know, you're not gonna exclude the lows as a target if that happens, right? But that's a if, right? That's if we get the breakdown and then sellers start take control. Only then would you actually be worried on a macro level, right? Until then, there's nothing to worry about. Even now, you can see we're compressing above previous all-time highs, right? So this is just a new range being created. So if we do this, delete this. So that's Total 1. Take a look at Total 2. Now Total 2 had a nasty wick, right? So we were compressing, we had a really nice structure going on. Over here we had like a compression structure going on, and then you got this breakdown, right? So the 3-month seller zone was violated, but again, look how you closed, right? The 3-month seller zone, the area we were saying is our higher time frame support that we don't want, like, you know, being lost. The candle body closes are still above the mid of that very key area, right? So big liquidation event, but look where you ended up actually closing, just about front run the mid of this range, right? And that's normal because of course, if you lose the range highs, the range mid is the next obvious answer, right? So you just about front run that. You're still holding the 3-month seller zone, which is crazy after all that's been liquidated. You're still back above here, right? So again, you can chop around some more, but now it's simple, right? What you don't want to do is lose this, right, mitigated order block on the weekly. I'm basing my thesis, as long as we're in this zone, around this plus that 3-month seller zone, an area where sellers used to be in control, right? That used to be the thesis for this zone. We want that thesis to remain an area where buyers are in control, right? As long as that happens, there will be no arguments for downside, right? It doesn't make sense to be favoring downside when an area that represented downside action is now an area where buyers are taking control, right? So buyers are still showing, if you give us the deep discount, we're going to take opportunity of that, right? That is what the price action is telling us. That is good. I don't care if we go to fill the wick, as long as, like we said, we go and flip that mid back into support at least, right? And then we go on a merry way back up in the future. For now, what do we have, right? We don't have a 786 yet. Was looking at this potential new wave structure. You have the A, B, C. If we were to get one more flush down, right, the 786, I won't be mad about that. Get a retest of this breakout, right? That'd be perfectly fine. So 786 will line up somewhere around that 12-month, 2022 12-month yearly level, right? But for now, for what we've got right now is basically a 695, so basically a 707. Right, just about front trying at 707. So for now, the wave structure you should be looking at based on what's on the chart is a 1.414 extension. Right, so if you do something like this, you're looking at a 1.414. And if you go and get that 786, then just change that to a 1.272. Right. But total 2, again, look at that recovery. That is fine. As long as you're above this zone, right, especially that dotted white line to that red box, as long as you're above this area, right, you are targeting back up here. Right, you're not targeting anything lower. All it takes, right, for you to flip is you just look for hourly candles, right? If you trigger happy, just look for hourly candles to breach, get lower highs in this area, right? If you get that sort of structure developing, then yes, you might be able to target a ETH short back down towards the lows again, right? But as long as you're holding these areas, there's no point targeting this again, right? Just play it level by level to make your life so much easier. And as long as you're defending this very key zone, there's no reason to be looking for downside. Only when this gets breached should you then be like, okay, well, let's look for downside. That's total.
On total 2 or total 3? That's total 2,
This
right?
is total 2, brother, yeah.
Okay.
So that's total 2. Let's take a look at total 3.
Total,
Retest.
total 3, I was looking around. Sorry to interrupt, bro.
No, it's
Total
alright,
3, I
brother.
was
It's
looking
what's good.
around the 750 billion mark.
Mm-hmm.
You had that kind of accumulation,
Yeah.
liquidity pocket, order block, cluster, whatever you want to call it.
Yeah.
Build there, wick off, and then bounce back into. I had like 900 billion, around 900 to 940 billion
Yeah.
mapped out. So just accumulating underneath there. But yeah, overall higher time frame market structure hasn't been broken, right? It's still bullish, but you've just got this range which is trading, which is why I was saying to people like I've personally sold off a lot of my spot bags over December, January time, and it's a trader's market right now. If you're gonna buy and hold for the long term, you got to have a big pot to play with, right? If it's
Yeah.
6, 7 figures, cool, it's worth doing spot. If not, it's a trader's market, and you should treat it as such.
Yeah, for sure, brother. 100% agree with that. Especially if you guys did catch any moves from that liquidation yesterday. Like I said this in my video I released last night, but when we closed yesterday's daily, many alts, including Total One, many was sat up right at resistance. Right, so the thing I was
Yeah,
telling people was, okay, look, if you missed that low, there's no point entering anything right now. Just wait until you
exactly.
either flip that resistance to support or revisit the some fill the wick at some point. Um,
Yeah, to be honest, price action this week has been so fucking clean, bro.
yes,
Obviously,
yeah,
yeah, we had the liquidation over the weekend. Monday coming into market open. Obviously, Asia was buying, London bought, New York bought. Nice rally to the upside. Then we get Asia sells Tuesday, right?
yeah,
And then London bought. So yeah, curious to see how New York plays out today. If they're going to continue that pattern.
yeah,
But regardless, price action's been very clean. I was just looking while you were streaming as long on Fartcoin, but it seems I've missed the window. It's already ran up 5%. Radium as well. Whether I don't know if you trade Radium, but I definitely keep an eye on that because the price action's
as in
been
the
super
Solana Dex,
clean.
right?
Yeah,
Yeah,
similar to Uniswap, but just a Solana oriented one.
yeah. I think I've got that. I had that charted in the past. I've not looked at it in a while, to be honest, but I'll keep an eye on it, man.
Mate,
Yeah, I'll keep an eye on it.
super big moves. I'd recommend trading it.
Yeah, yeah, sound, bro. I'll take a look at that, man. I'll look at it in a bit, actually. But okay, so on total 3, what we have is a few things here, right? So we had obviously the peak of your previous let's say impulse. You had a previous impulse peak at this area. That's why we had 788.86 billion marked out as a retest. The retest has occurred. What else did we have for Confluence? We had weekly fair value gap. We had mitigated textbook supply zone, right here, and we also had mitigated order block slightly above, right over here. Right, so no matter how you look at it, this cluster was an area where, as long as this used to be an area where sellers were in control, sellers were in control, right? And then you have now a zone where buyers should be in control, right? So you have one zone now where buyers should be in control. You have two areas where sellers used to be in control over the buyers, right over there, meaning supply used to be greater than demand. So when you break above anything like this, if you get a successful retest, right, the way I look at this is very simple. This has flipped. An area where sellers were in control over the buyers has now turned into an area where buyers are in control of the sellers. An area where supply was greater than demand has turned into an area where demand is greater than supply. You look at this, right, you speak to yourself in this manner and you will realize, okay, well, why would I open a short, right, at areas like this? Or why would I capitulate when what's actually going on right now is this is being proven to us? Right? It's a different story if you close below, because then you say, okay, well, look, sellers were in control of the buyers here before, and then they seem to have taken control once again. And then you ask yourself, what happened the last time this happened? And then you have something to worry about, because now you think, okay, we can go much lower, right? But if sellers aren't showing control at the area when you revisit it, then this is no longer the case. This is the case. So then you ask yourself, okay, well, what will happen if we're above this level? That's what you ask yourself. So now, as long as you accept above this zone, the historical price action tells us, well, you know, you're going back towards 0.5, right? Look, that's you've gone there before you rejected. And then above that you have the all-time highs, right? You have some resistances around here as well. So we've hit that first, right there. Anytime you're above this level, this is your first resistance peak, this is your second, and then it's all-time highs. We've hit the first, right? And then you wait until these levels get hit. You don't enter once those get hit. Once those get hit, you wait and you reevaluate, right? Okay, well, do sellers take control here? If sellers are showing control, perhaps you take some profits, especially if you've done any leverage trades, right? Because now there's a chance you might revisit again on the higher time frame. You know, these people like to revisit these more than once, right? Chop out anyone that's leveraged long, late, right? They get stopped out. But once you have confirmation that, okay, sellers are taking control once again, you take some profits, right? So when you see structure like this, and then you see, okay, well, we have buyers attempting, but they're not being rewarded, and then you close back below after, you know, you've just wicked above the local seller zone, supply zone, after such a huge rally up from the lows, right? Then you take some profits, and then you simply wait. If this gets flipped into support again, you can size back up, right? You don't need to close your positions fully if you don't want to. Take profits, right? Put your stop loss to break even. If this flips, you can size back up, because now you have a reason to actually target this, right, on a more local time scale. I'm talking. But if you don't, then there's no reason targeting that, because as long as sellers take control of this area, you're going to be visiting these areas again, just like it did over here. So when sellers take control, you revisited your next key level back to the downside, right? So, but in the higher time frame, what you've got is an area once again where sellers were in control and buyers have taken control back, right? So as long as this isn't breached and buyers keep defending this area, your argument to the upside is way greater than your argument to the downside, right? And once again, if you get below and you turn this back into resistance, that is when you worry on the macro level, right? You get rid of, if you're in positions that are in the green, you know, close them out. If you're positioned that in the red, just cut them. If you think, oh, I've got, you know, DCX just lower to where we are, get rid of those, because you probably have a deeper wick than you're thinking if you confirm back below this level, because you again have distributive structure. If that were to be the case, you don't want to be longing into distributive structure, right? But this is not distributive structure, right? This is very, very bullish, literally high highs, high lows, and this is simply your last serious flip of what was a serious resistance into serious support on total 3, right? Of course, I'll be much more bullish if we go and reclaim 2024 yearly level low at least to support, right? Then we're working with 2024 levels again. But even this low, 2021 is still a valid yearly level, right? That is your saving grace right now. On the local time scale, as long as you're holding this, you have a range. If you lose this, I think you have a deeper wick down back towards these areas before you go higher. So that's total 3. You can look at things like, you know, total 3 against Bitcoin, things like that as well, to give us a further edge when it comes to reading these charts, right? So you can look at total 3 against Bitcoin. But let's look at others next. Others, this was the only chart for us that was below resistance before this liquidation even happened, right? Weeks below this liquidation happened, we were talking about how others is the only one that was below resistance. The distributive structure was already there, right? There was your initial resistance, your radon liquidity, your reconfirmation of resistance happened like back mid-January, right? Mid-January, this was already happening, December, January. So you got follow through from that, right? And then you went to your range mid, under the lower high, And if you lose the range mid, then range lows is next. That's basically what's happened. This is textbook price action. Even though it's scary when things like this happen, right? You've got to realize this is literally just textbook price action, right? You distributed, you confirmed the distribution, you confirmed the lower high following the distribution, you lost the range mid, therefore you just took out range lows, right? That's it. But now that you are at range lows again, what you don't want to do is be one of the people that are opening shorts at this area, right? That does not make for a profitable trading strategy. How would you emphasize, or how would you rather prioritize a shorts here? Like if you go back here and you see this level is being treated as resistance, then you can try and take scalp to swing shorts back to the downside, right? And you size up on that if you get a loss of this, because then you've actually lost that big structure. You're looking for a way deeper pullback, right? But again, as long as we've not lost this, you know, shorting into range lows, that's never optimum, right? Never ever optimum. For obvious reasons, I don't explain why shorting support is not optimum to you guys. But all we did, took out, went back to range lows, and for now, what we have is, right, as long as you base around this level, you have initial support, you have one big radon liquidity down over here. If you base around this area, you will have reconfirmation of this support. This to me is this is a cumulative structure. Okay, you'll be looking for moves back up if this bases. That is a cumulative to me on on others, total others. Right, but for this structure to play out, you need to hold this zone here basically. If you don't only turn this to resistance, then I think you get a deeper pullback, something like this before you go higher. But that's total 3. Many of these, okay, so one sec, just realized something, and that something is that that is no longer valid. Not this, sorry, this C point is no longer valid. So what did we have so far? We've had a 786 basically, right? So let's look for a 1.272. There you have a wave structure taking you back to the upside. Yeah, there you go. That's basically a perfect 786, right? Literally 0.01 off. That's a perfect 786. So yeah, 1.272 back to the upside, right? If you base around these levels, the wave structure is going to take you to rate the all-time highs on total 3. So we just need to confirmation of that cumulative structure, right? One daily candle isn't enough to do it, in my opinion. Even if you don't revisit these areas, some sort of like, you know, chop around this area, some sort of basing in this area. That's what you need here. But you know, these aren't areas where you get bearish. Okay, if you want to get bearish now, either wait for some clean rejection from this area for scalp to swing. Okay, not straight up swing, scalp to swing mindset shorts to begin with, and then you hammer them down. You size up properly when you lose this structure here. Simply because if you haven't built any hedges up here, then your risk to reward is way less when things have already dropped like 30, 40, 50%. Right, so it doesn't make sense to start swinging from down over here in terms of shorts, since this is specifically referring to others as well. It's not like you're trying to short Bitcoin, where risk to reward would at least make sense for a swing. Many of these alts are literally decimated, right? But that is others. Let's look at total DeFi. Holding the trend, nothing else to say. Your M shape is still in play. This one, no, not this one. That one's invalidated. This one here. There. Right, this M shape is still in play. You hit your ABC, well, you front ran your ABCD target, right? You came back down. You probably have an M shape here, to be honest. If I take a look, 1 second. If you do this, let's go from the internal first. Yeah, that's basically an 886, right? So you've completed a bullish bat again on total DeFi. 0.5, there you go. 0.8, so basically nearly a perfect 886, right? Straight back into again your trend. So everything's like nothing, no damage has been done, right? Like we were saying, structure is still intact. You just revisited, strong support areas. That's it. Market was extended. You cooled off, and that's it. Market works whether it's on the micro or the macro. It works in cycles, right? You had the cycle that sent you up. You had a little period, a cycle that sent you back down. And if buyers step in here again, you're gonna have the cycle that sends you back up eventually. Right, of course, now your next state of affairs is to flip the B point into support, right? T2's already been taken. Your next target is all-time highs. Flip the B into support, right? That is where you would size up on any DeFi coins. If you didn't enter anything here, right? What you do now to keep risk to reward same, because now you're trying to enter. Let's say if you were to enter a swing here, right? Your only logical stop loss would be below this extremity here. That is an extremely big zone through which you're trying to manage your risk. So it doesn't make sense for you to be slamming bids down here thinking I'm going to hold it, right? Especially not going all in. If it's spot and you're willing to hold that over a long period of time, that's a different matter. But most people aren't willing to do that, right? So for most people, the situation is now that you've had your higher time frame, like like let's say liquidation event, you're looking for lower time frame entry models, right? Something like the hourly, the daily even. Right now where you are, right, you either flip this into support to have some exposure to DeFi coins, or you just don't do anything for now. Okay, very simple. Right now you're treating it as resistance. You want this 2022 12-month key level to be support, right? And again, this is why this scalp to swing mindset comes in handy now, because you can at least have eligible and very, very strong risk to reward trades based on this, right? You've had your higher time frame confluence, you have your higher time frame thesis. Now you're just executing slightly on the lower time frame so that your risk to reward is manageable. If you don't do that and you just slam a bid here thinking, oh yeah, I'm willing to hold, you will not. I think you're severely underestimating how long we could chop for, right? People always do this thinking, yeah, we're just gonna buy here because it's a big liquidation event and I'm happy holding. Very few people are actually happy holding, right? Because you could be deep in the red for a while before you actually get that move back up, right? So if you want to avoid that and you're not the type of trader that's okay holding in the red or holding for long swaths of time at a time, then look for that lower time frame entry models around your higher time frame key levels, right? So daily entry models, 4 hour, hourly around yearly levels, right? Perfect, right? Because you know what's going on. If you're below this, you don't. For example, locally speaking, as long as you're above this, you're going to be long on your DeFi projects. As long as you get below this, you're just going to get out of those longs, right? It's very, very simple. And it becomes easier to manage in the sense that you're not going to be holding something deep in the red. If you're the type of person who cannot stomach red, you're going to be in and out so that you're not in that situation, right? So that's total DeFi. And last but not least, we'll look at others before we actually move on to proper crypto. So sorry if this is a bit long-winded. I just wanted to go over everything since we've had this liquidation event. I think it's important you re-anchor yourselves with these macro charts, what they're telling you. Total others, right? So we had a clean sweep of that trend line, as you can see, right? Scary stuff. I won't lie to you. That was very, very scary because, like I said, you do not want to be holding alts, in my opinion, if you confirm below this trend line, right? Locally speaking, simply because if you do that, the next thing you're doing is you're basically targeting external liquidity to be taken out if you're below this, right? If you're targeting that, it wouldn't make sense because if all this dominance is coming down, altcoins as a whole are going to be bleeding, right? Which is exactly what we saw, right? So if you lose this with vengeance, then you do not want to be holding alts, right? Just get out your alts and just get back in when structure develops again. But for now, even though you had the sweep, right, what you do have is you had a bat over here. You can see 0.5, right, back up over here to the C point, and then down over here 0.914. So you had a bat 886 and a bat 2.618 right in this area, right? So you have a completed M shape right there in this area, right? That's been respected. The trend line has also been respected. The D point for the Gartley, basically, right? That has also still been respected. So the structure is still intact, right? Even though the lows have been flushed, at least the structure for now remains intact. That's the important thing. So as long as the structure remains intact, we'll be looking for moves back up on others' dominance. But if you want to keep it very, very simple, right? You don't want to over confuse. You don't want to get confused. You don't want it to be complicated. You just want to know, okay, when do I get out my alts? If you do this and you start turning this to resistance, just get out your alts. Okay, it doesn't matter what it is, just get rid of it. You can always get back in when something simple like this happens, right? And since this is others dominance, this is especially true if your coin is not in the top 100. If your coin is not in the top 10, right? Because obviously others crypto total market cap excluding the top 10. So if you're holding the 50th or the 200th rank cryptocurrency, and you see this is slipping, and you now have this turning to resistance, then yes, in my opinion, just get rid of your alts, right? Very, very simple, because you don't even need to look at your chart. If this slips, alts as a whole are going to be bleeding, right? Just get back in when this gets flipped into support again, because then you have a reason for others dominance to actually shoot up, right? Which is going to take your altcoin, if it's the 200 rank, the 1000 rank, doesn't matter what it is, it's going to go up with it, right? Of course, you're going to be looking at the actual chart for the coin itself as well, for Confluence, but as a macro indication, if you're literally all in on alts right now, firstly, God save you, but secondly, this should be your best friend. Because if you're below this, look, you're at pivotal areas. If you lose this, you're out. Okay, in my opinion, just get out and just get back in when this gets reclaimed into supports, or when external targets get hit and you get some sort of cumulative structure going on down a bit there. You'll get even deeper prices to buy, right? But in my opinion, it doesn't make sense holding alts for a what if, right? What if you don't go that low? Right, so people won't capitulate. People who hold in the red thinking like, oh, but what if we reclaim again? Doesn't matter. Just cut in the red. If you reclaim, just buy back up. The tiny loss you make here, if you look in perspective, do you really think is going to hinder you? No, because if you're trying to catch this, whatever loss you make in closing when this gets below, is you're going to make tenfold back when this happens, right? Just set your alerts up, and I can promise you, right? If you actually see that this has been turned to resistance and you get out, you're gonna be very thankful when you actually start chopping below this level. Because when this flips to resistance slash if, of course, just look at historical price action. This is the range you'd be working with. Okay, so even let's say the middle of the range, just roughly speaking, would be around 6.8%, somewhere around there. That's gonna be extremely heavy hits on alts if this were to play out. If this were to break down and it were to go lower. Okay, you'll be thanking yourself for getting rid of your alts here, because firstly you'll have money to now buy deeper, right? Whatever pain you felt here, you've got coins in deeper, and that's going to be in the green, so you'll make your losses back eventually. But you have now deeper entries, meaning you can now size up again, add better prices, your average is going to be better, and then you'll be fully positioned once the trend's actually on your side, and then you cash the bulk of the move. That is all you're trying to do, right? With when you're trying to enter higher time frame trades on these. So others dominance, just keep these levels in mind. If you turn this into resistance, just get out, in my opinion. But if you don't turn into resistance right now, you are at the area that needs to be held for us to go back higher. Right, so if you are again heavy into altcoins, do not fade the others dominance chart. Okay, keep that in mind. Look at total 3 against Bitcoin as well. That's the other one you should be looking at. But that is
Yeah, I'm not sure. Sorry to interrupt, but
sorry,
I'm not
brother.
sure how people. I'm not sure how people trade without looking at others' dominance or without looking at USDT dominance. For me, I can't take a trade without looking at them.
Yeah, exactly right. These are like your anchor for the scene, basically. It's your compass. That's the way I look at it. You get lost without these. Yeah, for sure, bro.
100%. But yeah, like you said, bro, USDT dominance is looking good to close below that weekly trend line.
Yeah,
And then I'd be looking to target, say, 4.25, and then the low for 3.7% again.
yeah,
And then for BTC, targeting range highs.
yeah, for sure, brother. I agree with that. Yeah, just chop around some more before. Guys, if you're looking for euphoria, right, what you're looking for, I just give you one scenario. Okay, you're looking for this for euphoria, and even if you do not get a perfect retest, right, whatever imbalance is created in this area, you're looking for that to get hit, confirmed as resistance, right? This is when it's okay for you to actually turn euphoric, and then just hold until like you think market tops come in. Until that happens, you're just gonna like Caleb was saying, this is the range you're working with, right here.
Right, I wish I took that Fartcoin long with man. At the start of the stream, I was looking at Fartcoin long. I was waiting for a little bit of a better entry. It's already pumped 7%.
Let's look at it. Farcoin. Yeah, let's look at it
You
now
go on,
fully.
go on the
Yeah,
1 minute.
there we go. Oh yeah, you reacted very strongly off there. Yeah, bro. I mean, is this market buys as well? 1 second. Yes, loads of aggressive market orders coming in here.
Yeah, really, really aggressive.
I think this is one of those coins that actually performs really well again, bro. I've got a bag of this.
Yeah,
I hope
same
it.
here, bro.
Yeah, I
To be
think it will
honest,
go up.
as stupid as it may sound, Fartcoin, but it's made I've done better on Fartcoin than I have done on XRP,
Yeah,
Sui, Solana.
yeah,
Yes, but the thing is, like, you don't really, when say Bitcoin goes green, right? Say Bitcoin goes up
yeah,
3%, altcoins would usually go up, say 5%, right?
yeah,
There's gonna be some altcoins, stupid ones, right? Like Giga, Chad, Sigma, or coins like this, which will go up 30 to 40%. And being able to catch these moves is, it's a lot better. Like you could trade Solana, sure, but Solana's is not going to go up too much, right? It's a larger market cap coin.
yeah,
Whereas I see a lot of the Bitcoin maxis, OG maxis, are in Fartcoin.
yeah,
So whenever Bitcoin has a large move, Fartcoin does as well. So super volatile, but very fun, very profitable to trade.
yeah, yeah, bro. Volatility is always it's your best friend if you know how to manage your risk.
100%,
Just most people just don't
100%.
know how to manage their risk. So
Mm,
right, okay. Let's look at Bitcoin. Actually, let me see if there's any questions in chat. I've just not actually looked at the chat yet. British accent gang in the building. In it, boys, in it. Yeah, nice one, Winter. Dixie, bro. Grassadi, I don't know if you have Dixie at your end of the pond, bro. But Dixie is also like a fast food chain over here. Slaps as well.
Is it? I
Yeah,
never heard of
Dixie's
Dixie.
chicken.
Dixie's chicken.
Yeah, I don't know if it's just for like.
Oh, it is.
Yeah, but it's honestly the food's good as
Yeah.
well. What's up, guys? Sorry, I was just rambling on. I'll just catch up with the chat now, real quick.
Barry said we got Morley's. Uh,
Woo. Yeah, I was looking at that the other day, bro. Grass. I look at Woo.
is that Teal Street's coin or no?
Woo. That's I'm not sure if it's on Till Street. I mean, I'm sure it's on Till Street, but it's just it's
What
for
about
the
Pop Smoke's
PNG.
coin?
What's that? Looking at Woo. Yeah, Woo looks really good. I was looking at it the other day. Fuck on.
Gasty, what entry were you looking at Woo? Because it's pretty much bottomed out. I mean, 10 cents would have been clean, but other than that, yeah.
Okay. Let's look at Bitcoin underneath, Sol, all of those, and then we'll look at Woo and a few other old stuff that I'm layering into. Okay, Bitcoin first. Like I was saying just now, right? Nothing crazy's happened on Bitcoin, and I'm gonna give you guys a different perspective on this. I've said it in my last couple of YouTube videos, but I'll do it on this stream as well, just in case someone, you guys haven't seen that yet. There's a very nice perspective you can look at on Bitcoin, right? The reason I've been saying I don't think the market's topped out yet, there's nothing to worry about yet, right? The reason I keep saying this is there's two distinct things. So for me, right, we have firstly the area we're chopping within right now, right? So this is your 2024. This for 2024. This is your sellers, and for my system, this is the area where sellers were in control for 2024. So all I've got myself three distinct support resistance levels based off the area where sellers were in control, right? The high, the mid, and the low. That's it. What we're saying is, as long as one side doesn't show advantage over the other, you're going to be ranging within this area, right? So if I take this back, so this is where 2024 closed. As soon as 2024 closed, right, this is how you put that down. You just look at the total area where sellers are in control. So even if I were to go to the daily, everything that's happened so far on Bitcoin is you've just been ranging, right? Buyers have been trying to take control over the sellers, and the sellers have been establishing control back over the buyers. So if I hit play, and if you know what, let's look at the 4 hours as well, just to get more detail. If I hit play, right, buyers took control. So after buyers take control, you're saying next area to target is the mid, right? You went to the mid, loads of aggressive buying came in, sellers took control back, right? The aggressive buying wasn't rewarded at the mid, so then you went back to the lows, right? You chopped around at the lows, buyers once again take control, and then you go back to the mid, right? You can see sellers try to object, but buyers end up taking control. And then what happens? You retest the mid into support, confirm, okay, this area where in 2024 sellers were in control over the buyers are currently holding power over the sellers, right? Buyers are showing an edge. This here is an example of buyers showing an edge. You have a breakout, you have a retest. Even though you have a high volume sell candle, the actual area that buyers are defending is the area that needs to be defended. That's the mid of the areas where sellers are in control. So based off this, you go long, not short, right? And then the long takes you now to the sellers on high. You sweep the highs, aggressive orders come in, but again we know buyers aren't rewarded in this case. Buyers are absorbed. If buyers are absorbed, what do? You go back to the next key area, very serious. Once again, the mid of the areas where sellers were in control, right? So you're chopping, and then what happens eventually? Like one side's got to give, right? Well, who gives in this case, right? After the high is taken, you confirm on the lower time frame as well, right? So in this abject time frame over here, you confirm distributive structure. This is distributive structure when you have aggressive buying into resistance, you have deviation, a reconfirmation of resistance, right? That was distributive, that sends you lower, and then you came back up to reconfirm this is resistance once again. If sellers are showing you an edge at an area where they're already showing you an edge, you take the short. You don't try to be a moon boy and just long thinking, yeah, we're gonna go randomly to 120k or whatever, right? This is a logical area for a short, right? Once that happened, you went back down to the mid, and this time around, buyers could not defend, right? You see that? You candle closed below, meaning buyers couldn't actually hold the demand from the buyers wasn't enough to absorb the sellers, and then the retest confirmed, right? There was a period where buyers had a chance to break above, but then the candle ended up closing below on the 4 hours, meaning even on the lower time frame, sellers showed an edge, right? And that is what ultimately took you lower, back down towards the range lows again. This is the capitulation event, right? This is where capitulation occurred. Loads of aggressive selling straight into the low of a seller zone, right? But this would be fine if you were below the seller zone, but you're not. Or this aggressive selling is going into the seller zone, right? So when this happens, buyers have an opportunity to absorb the sellers, and that is exactly what we see has happened, right? Based off the capitulation that literally occurred, right? All these aggressive selling, market shorts opened up, right? Market shorts opened up straight into, once again, the same level, right? After since 2024 close, 2024 12-month seller zone low, right? If sellers were being rewarded, you would have closed below, right? And then that would have been fine. You probably would have carried on going lower, or at the least you had a chance to retest this level, confirm a resistance, for sellers to take control and then go back lower, right? But sellers never got that chance because all this aggressive selling at the end of the day, by the time that 4 hour closed, look how you closed. You closed above that key area, meaning this was an area where sellers were in control, right? Once 2024 closed, right? Throughout 2024, this was the low of the area where sellers were in control. Is this still an area where sellers are in control? No, right? Why? Because yes, even though aggressive shorts are opening, that doesn't indicate sellers are taking control, right? What indicates whose side is in control is the structure that comes off from the once the dust is settled after the transaction was finished, right? There's a load of transactions, market shorts opening, but once the 4 hour candle closes, look where you close. You close above, meaning all these market shorts, right? Obviously for every market order there has to be a limit order, right? That's how trading works. So all these market shorts are going straight into limit longs, right? Or limit spot bids, whatever it is. They're going straight to limit orders, and this kind of body close is telling you there were not enough market shorts to actually overcome all the limit longs in this area, i.e. this is absorption, right? This is what absorption looks like. Sellers got absorbed. That is not the same as sellers are being rewarded. Absorption is not a sign of reward. Okay, absorption is a sign that, okay, all your hard work has been for nothing. The buyers are still overwhelming you in this case. This is seller absorption, right? So even after that capitulation wick, this is what I mean when I say, look, we're just ranging, no major damage has been done. Because you correlate this with USDT dominance. USDT dominance, same thing, right? You're still chopping in between the line of best fit and the range extreme. Bitcoin is still chopping in between its 2024 seller zone, high, low, and mid. Right, so now if you get a move back up, right, if you get a move back up towards a 0.5, let's say towards this area, and you start seeing on the hourly or on the 4 hours like some sort of rejection from this area again, you can scalp shorts here. Okay, you can look for shorts in this area as a hedge, because if sellers show control here, what they're saying is, what you're saying is sellers are showing control at an area, but they've shown control in the past, right? That is a thesis for you to be short on, not long. But as soon as you flip this, I would get out of any shorts because you're scalping with upside targets in mind, right? Which is why I know I say this every stream, but having the ability to find significant levels is the number one thing you should focus on, especially if you're new. Okay, because less is more, right? Less is more. You don't need a million lines on your screen to be successful. You just need a few that work, right? And you just read price action around those levels. Whichever side shows you an edge, right, in terms of price action, once you read the price action, that is the side you go with. Right? If you go back here and you start seeing SFPs kind of body closes, exactly like we looked at the 4 hours before, right? Sellers are showing you an edge. That's an area where we historically know this is literally for the 2024 yearly candle where sellers were in control anyway. That's a reason for you to prioritize shorts. But if you see a flip of that, then that thesis flips on its head, and now buyers are taking control of an area where sellers were in control. So that is not a thesis to be shorts on, right? That is an attempted flip from buyers. You long into that if that flip is successful, right? And then you look for highs before you look for shorts again. So Bitcoin just ranging, right? In terms of horizontals, right? Now, I'm also going to explain something to you guys in terms of diagonals. I know many of you get scared when I turn these scary diagonal lines on, but just as a different perspective to the chart, right? What else have we been doing since we have come up to this area, right? If we take a look, right? I'm going to go ahead over here. I'm going to turn this on. You will notice Bitcoin has simply, once again, been ranging in between the golden pocket and liquidity rate and golden pocket and liquidity rate of your fib speed resistance band extension of your previous consolidation zone. Okay, so how did I get this? Basically, all I did is I got the fib speed resistance fan. So if I were to go over here, right, and I was just about to go and select the range first, here, high to low, there. That is the fib speed resistance value you could have put down, but when we were in this range, right? When we were in this range, that is the fib speed resistance value you had. As soon as this low came in August, this is the fib speed resistance value you're working with, right? So first your fib speed resistance value was this, and then it was this, and then it was this. You just go impulse to impulse, right? So if I was to, you know, put a few more down just to show you, like, you know, these do work. So I've shown you guys these before. I explained this in previous streams, like what Bitcoin was doing before the breakouts to these new highs. So for example, if I was to put the deep retracements on, right, exact same thing, and it were to go onto the daily, you will notice, right, I've already explained this before, but what Bitcoin did over here, right, before the breakout, look, you had the 786 and 764 as resistance, right, after that low came in. You broke out, used the 88687 as resistance, deep value, you flipped the 764, 786 into support before flipping the 88687 into support, and that is what propels you higher, right? So diagonals are a perspective most people don't utilize when it comes to their trading, right, especially diagonal fibs, but it's extremely, extremely powerful, right? If I was to go ahead and throw the golden pocket on as well, from here to here, right, you will see more confluence as to why Bitcoin behaved the way it did. After this zero came in, look, your initial resistance 0.5, you flip the 38234 into support, resistance at the golden pocket, you flip the 38234 into support again, right, and then the 0.5 into support, and then the next golden pocket into support, and then the levels we're looking at, and then you broke out. Right? And this is significant because now hopefully you guys realize this gives you a perspective in terms of historical price action that horizontal levels don't, right? Horizontal levels are stagnant, right? They're only significant as long as price is in that area. 57,596, for example, this level here is only significant when price is around 57,596. That is the only time this level will be in play. But you'll notice with diagonals, right? Let's say once you put this zero in, this golden pocket was in. What did you do? You flip that golden pocket to support here, right? You flip the same golden pocket to support again. So if you were to get rid of your, horizontal levels, then you would realize there's nothing bearish about this, right? Because in terms of historical price action, what was once supports is once again support, right? That is very significant. That in terms of horizontal context, that's the same as saying, okay, when you get a breakout and a retest and you get a double bottom, right? In a horizontal double bottom, what was once support is once again support. The only difference being between that and now is with this you have a trend over time, so it's more dynamic, right? Your two different price points, unless they happen back to back, are not going to be at the same area, especially determined by the gradient at which your diagonal lines are expanding, right? But all this was a double bottom, right? On the diagonal this was a double bottom, that's all it was. The same exact area that was one support is support. And even though this to most people wouldn't look like a flip, this was a flip. Again, if I turn this off, right, you would hopefully realize that what was once resistance flipped to support. That is bullish. Even though the resistance was at a higher price, we do not care, okay? Because what we care about is the trend over time. You're overcoming the downtrend that was being projected. That's the important thing. What was once resistance is support. This is the same as a breakout retest, right? When you have a resistance, what was once resistance, when you get the retest is support, and that is where you enter. This is the exact same thing, right? So just a quick explanation on what these diagonals are, right? So again, same thing over here now. What was once resistance got flipped to support, right? What was once resistance got flipped to support. Even though the level is lower, it doesn't matter. It's the fact that it's the same zone. It's the golden pocket, right? So once we break off the one, all I've done is for this exact same range, put the extension down. So the 1.34, 1.382, so on and so forth, right? So once you put that extension down, that is how I got that golden pocket, right? So this very large, very, very higher time frame range we were within for Bitcoin, that's still going to be significant on the expansion, right? So that is why I put this particular expansion down. Once you realize, if you do that, you'll realize all we've been doing, once again, right? So another perspective is once again just ranging in between the golden pockets of that expanded 15 resistance band. Of course, we know golden pockets are very, very pivotal, right? No market damage has been done. Over time, you're holding the support. Over time, you're holding the resistance. Until one side clearly gives way, right? There is nothing sinister about this chart whatsoever, right? There's no bearish structure. There's no, distributive structure going on. Nothing. You're literally just ranging, which makes the liquidation event yesterday even crazier, because you realize, they're saying, that 2 billion was a low ball, right? They're saying that's Binance only. They're saying like 8 to 10 billion could have been liquidated. You realize that's happened when Bitcoin has literally just been going sideways. It's crazy, but Bitcoin has literally just been going sideways, which is why, which is why I'm still saying my stance for now is still that the market hasn't topped out yet, But I don't think the bull market's topped out yet, or the bull market's over or anything like this. I don't think. I think Bitcoin could very easily go up and make a new high. Okay, I don't think the market top is in for Bitcoin, and this is one of the reasons I've been saying that for a long time. Right now, it's not just that. That's the most local one, right? So you can pull fibonacci resistance bands, you know, from, especially if you consider your macro wave structure, right? For example, let's consider the entire 2021 bull run slash bear market. If I were to put the fibonacci resistance fan V1 on, under the perspective for you, right? So now this is the fibonacci resistance fan from 2020 low, when the bull market started, to the first peak. Okay, to the first peak. You will notice, what have we been doing here? We have been chopping in between, once again, the 618 and the 6.6, right? You've just been ranging in between the golden pocket. And this is what I mean when I say diagonals will give you a perspective in terms of price action that horizontals just won't. Okay, because in terms of horizontals, this is uncharted territory, right? There is no historical price action here. In terms of horizontals, that is 100% correct. There is no historical price action here, right? Even in terms of wave structure, right? So for example, when I expanded the ABCDs, all I could do was give you potential targets, and we could simply wait and actually see, okay, well, do these targets end up being respected? That's going to be dependent on the price action we get once we get here, right? But even in terms of wave structures, there's no guarantees these are the key levels, right? For we know, we could have blasted through all of this and gone straight to 3.618. Who knows? That could have happened, right? It could have. Only reason it didn't is because it didn't, right? It's what it is. Until it's happened, you won't know, because no historical data is present here. That is true in terms of horizontals. Even if you're using fib extensions or trend-based fib extensions, you can give yourself levels, but there is no historical price action around those levels, right? Because let's say you were to take a trend-based fib extension, right, over here, and let's say you were to go for the macro, right? So we were to go for, let's say, this low to this high and to this high low. Yes, we hit the deep extension and we're chilling around the golden pocket for now, right? You've hit the front run of the liquidity rate in my system. That's what I call it. That's fine, right? That's fine. But again, going into this area, we didn't have any historical price action, right? So any price action occurring here is new. That is true for no matter what horizontal perspective you're looking at, but that is not the case for diagonal perspective, because in terms of diagonal perspective, we do have historical price action here, and that happened over here, right? Historically, once that zero came in, 61866 was support, and then it was support once again until it flipped to resistance, and then you broke down, right? So we know that 61866 has been resistance for a long time. So we're not surprised that is where we go to before we top out again. Historical price action tells us this is very, very strong resistance, right? So this is an historical price action in the sense that, you know, we've had price action at 107k before. That's not the case. This is historical price action in the sense that these exact same levels have been in play before, right? They've been in play all the way back in 2022. They've been in play all the way back in 2021. We're extrapolating that to the exact same to the area we're at now because it's the same zone, right? So we're not going to be surprised, right? Look what happened over here, right? We had a long consolidation period over here. In fact, Bitcoin only dropped and carried on its downtrend once the liquidity rate of the golden pocket was lost, right? Once the 702-707 was lost, what happened? You never actually, you never checked back to that breakout. So you never had a retest of that breakdown. When did you get the retest? This bull market first impulse, 2024. That top right there, and the reason I gave you guys, one of the main reasons I gave you guys that 74k head short, right, that we opened up in this area, right, was because we finally had a confirmation of that breakdown from 2022 is still resistance, right? So even though, look, completely different in terms of horizontals, the price action carries on, right? That is the power of diagonals. It gives you a perspective on the markets horizontal levels will not give you, okay? 702-707, right? And none of this is me fitting data. All you had to do was one click here, one click here. Everything else is simply price action corresponding to the actual levels, right? It's not like I'm clicking in and thinking, oh, the price looks best if I put this over here. That's not the case. I've literally pinpointed two specific instances. Everything onwards from the 12th of April 2021 is just reaction to those levels. Nothing is fitted, nothing, right? Everything is, we're just looking at reactions around those levels, organic reactions. So this breakdown was confirmed, right? That is why we chopped for a long time. But what was once resistance now has once again been confirmed to be support, right? That is what propelled us higher. And then now we have a breakout from above, a breakout from that resistance level. Every time we're above this, we can see historically where do we go? The 618. So we're not surprised when we broke above this, we went to the 618 before topping out. So this is what I mean when I say, like, you know, we're completely fine. Even if Bitcoin was to have a flush lower, right? As long as you do not lose this 702-707, hopefully you guys can see where I'm going with this now, everything is still going to be fine because This has been a consolidation range before. We're not going to be surprised if this becomes a consolidation range again, right? Now, this could happen because we get one more flush, right? Or this could happen because you actually get an elongated sideways market and the trend catches up with you over time, right? And you don't even get a flush. So let's say if we keep chopping till June, probably not going to happen, but in the rare case it does, right? If you literally just keep going sideways like this until June, right? What's going to happen is this trend is going to catch up with you. So by the time June comes around, what was once resistance is going to be support, and the range lows are still going to be held. If this were to happen, right, let's say we were to get a sideways market till June, I'm of the belief that as long as you're not treating this as resistance by the time we get there, right, as long as you're above this, you have expansion up, right? But of course, that is given. That's if we actually have a sideways market till June, or if, by the time we get to June, you've gone up and come back down to this as support again. If by the time June comes around and this is resistance, then you're looking for lower prices again, right? Is what it is. But diagonals will give you a perspective you do not get from horizontals, right? So historical price action with trend over time is extremely, extremely powerful. Right, so you had that. Of course, you also have another one over here. So this is now from this low to the actual peak of the last bull market. So if I turn this off, in case many of you won't be used to this many lines, so let's turn this on instead. And in that case, what we're doing is chopping around the 0.5, right? For now, that is resistance. So until we get back above the 0.5, any lower time frame scalp longs, I wouldn't be in, right? I'd want to be back above this if I'm looking to be in any any trades to the upside. I was going to go below this. You're not going to be surprised if we chop back down again. But now putting those two together, we now have a very distinct zone in which we know as long as we hold, we're fine, right? And that's why buyers have been trying so hard to not lose this level. Right, because there's this 0.5 and there's also this 61866 area, right? You have the 666 and 0.5 from those two different trends lining up. As long as you're holding this zone, right, ultimately I'll be looking for grinds back up to the upside, right? If you come down and then you ever flip this level to be resistance, then eventually I do think these lows get taken and you have some sort of deep pullback like this before you actually chop and go back higher. Okay. So diagonals is a different perspective to what most people use on the market, but is an extremely, extremely powerful perspective that is extremely underutilized in my opinion, right? So just something to keep in mind, right? We have it's not like price action here is alien. There's methods in terms of TA, but you can give yourself a thesis, give yourself a benchmark to what you're trying to compare price action to, right? But no matter how you look at it, the point I'm making is whether you look at this 50 resistance fan here, wait, hang on, not this one, sorry. Whether you look at this 50 resistance fan here, or you look at this 50 resistance fan we just looked at down over here, we are clearly ranging at an area that was once historical resistance, right? Historical resistance with below it, but the resistance is currently also being held as support at the lows, right? Buyers are defending an area they need to. Only once you lose this area would I expect the actual flush towards 86k, so on and so forth, right? And you set alerts for these levels. If you get a breakdown, start doing something like this, then yes, you're probably going to get the 85k tap, right? But it's not happened yet, right? As long as it doesn't happen, you're not just going to sit there praying that it happens, right? You need a reason for it to actually trigger. The trigger condition for that would be something like this. So just a different perspective for you guys in terms of why we've been chopping in this area, right? It's a very, very historical area in terms of, even though to most people this is an area with no historical price action, for me this is an area with historical price action if you incorporate diagonals, right? It's the same thing. We had chopped in this range before. This is historical support resistance, but simply at that same area again, right? But let me turn this off. Let me go to another thing to note is we did have an 886 here. Okay, so if I do this, doesn't matter if you look at this as a shark or a bat. If I go to the daily, right, you had a shark, you had a bat. Of course, again, we know that's now lining up with the low of your buyer seller zone. Sorry, your seller zone, right? That's lining up with your golden pocket, and we also know that's lining up with your 6-6 in this case, right? So a lot of confluence as to why this was a very key area for us anyway. You had the 886, 873, so bat plus shark in this area. It's just a bullish reaction. Actually, one of the craziest reactions I've seen at the time frame that it happened to a bullish harmonic pattern across the board. This was extremely, extremely. This is a very, very strong reaction that we had.
Sorry to interrupt,
Yeah, of course,
Weatherman. We've
brother.
just had some interesting news come out, obviously with and it's an update following up the tariff war which was going on. I've been looking at the Kobasi letter. They've been posting some really good insights. So it says, breaking: China's opened antitrust investigations into Nvidia and Google just hours after imposing the 10 to 15% tariffs on some US imports. But yeah, that's just a little follow up with what's going on. I know that Trump had a meeting with the lady of Mexico and then also Justin Trudeau from
Justin Trudeau.
Canada,
Yeah.
and they did a month delay on their
Yeah.
import
Some
export tariffs.
restrictions. Oh, okay.
Interesting. Also, meanwhile, I shared a long on OM. I didn't take this just yet. I was waiting for confirmation, but missed it. That's already up 3%.
Oh
And
yeah, I did
then
see that.
yeah,
Yeah.
yeah. Markets are open. I'm curious to see how New York plays out.
Yeah.
Um, but I should have been up for London session. I was up too late with my pal last night.
Yeah.
We were basically just because he's got into trading recently, so
Yeah.
I was just showing him. He was like, "Oh, should I take this?" I was like, "No, do not take any positions. Asia is gonna sell off tonight. You know, if you wanna wait up till 2:30 a.m., be my guest and look for shorts." But yeah, either that, you either want to be trading, the sessions really, trading in between CMPs, and unless it's at your level, your point of control or
Yeah.
interest, then it's quite risky in my opinion.
Yeah.
You either want to be trading where there's the most amount of volume to one direction, right?
Yeah. Exactly. When you have like that serious edge, I think that's the only time you should be pulling triggers right now. After like pumps already, it's just really really hard unless you're looking for a
Yeah, you shouldn't be chasing green candles ever.
yeah. Yeah, for sure, brother. Um, but yeah, I'd be interested to see how this plays out with China. And certainly at the beginning of March, yeah, brother, there will be probably probably another liquidation event so Trump can get his ETH bags filled again.
Oh, 100%.
Yeah.
I mean, they bought the top. I think they're overall down at the moment on their ETH pegs.
Yeah.
After the Trump coin launch, World Liberty Fire, they bought a bunch of ETH.
Well, if these lows don't get challenged anytime soon, then that's well, maybe it gets
Yeah.
challenged in March. We'll have to
Mm,
see on that. Let me
yeah.
see. Let me catch up with the chats.
Yeah, we got New York in 1 hour. Will
One
you be
hour.
looking to take any new perp trades today, whether, or are you chilling?
I think I'm going to be chilling for today, bro.
Chilling
Unless
for
we,
today.
yeah, I think the only way I would take any perp trades is if we either get that pullback towards some like weak mids and we get some reactions off it. Otherwise, I think I'll just be chilling because I took some profits from the
Yeah.
leverage plays from the liquidation, so I don't want to give
Yeah.
anything back unnecessarily.
Yeah, it's true. I'm happy with what I've made this week so far.
Yeah,
So
yeah, bro, same.
today, I mean, there's some good positions I've missed, like shorting Asian market or London Open was good for longs on some of the pairs that I trade. But yeah, we'll see how New York goes. We've got a key event actually later this evening. There's going to be someone from the White House who's going to be speaking at a digital asset conference.
Oh yeah, I forgot about that.
Trump's.
Trump's there as well, right?
I don't know if Trump's actually going to be there. I read an article. It's David Sachs, who serves as Donald Trump's AI and crypto czar,
Yeah.
will hold a press conference in the White House at 7:30 p.m. our time,
Okay.
discussing U.S. digital asset strategy. So there's probably going to be quite large inflows this evening. If anything, I'd expect New York to follow London, and we see buys on New York, and then we see buys for then as well.
Yeah.
So that's why I'm thinking we could have some more moves to the upside today.
Yeah. I mean, Bitcoin right now looks good as well. Locally speaking, that's a cumulative structure being attempted to put in. So I'd want to
And
get
what at
involved because
98 too when we touch that support zone. I don't know
yeah,
if that's what you're
this right
looking
here,
at.
99028 to 97738. That's what I've got. But I'm using the index chart, so it might be slightly different to the exchanges. Um,
Mm,
but yeah, as long as we maintain this, that's a cumulative in my eyes. You have your initial support, you have your big deviation, which liquidated a lot of people, reconfirmation and support. So if you get a high low here now, I think that's your like safe entry to take back up towards 108 again.
yeah, I just shared my BTC chart.
Let's take a
I
look.
don't know if you can understand my chart.
You're of your that your red and green is that's moving averages, right? The actual bands.
What, the oscillators?
Yeah, the oscillators.
Top one is Delta Volume, so that's custom, that's under Oracle Algo, and then bottom one's MACD.
Like the okay, yeah.
Yeah. But regardless, I was looking at obviously 92.5K is your point of interest, your range
Yeah,
of lows. And then you got 96.6, which we flipped, also lining up with your 365 EMA, 200 EMA.
yeah,
And then you've got 98K, which is just a resistance support level. And then you got a liquidity pocket at like 102, which we rejected from. So, yeah, low time frame market structure is bullish.
it is. Yeah,
But we want to We want to see some daily closes above 98, basically.
Yeah, we need some follow through from this. But yeah, this looks good. For now, this looks good. It's looking good. A cumulative structure being attempted to be put in, guys. Not confirmed yet. You kind of need follow through for confirmation. But if you follow through and flip this, yeah, I think that cumulative structure is confirmed. I actually think you run it towards 108. So towards range highs anyway. We know there's that resistance level we talked about before, but somewhere around that area. So we know this is going up over time. So back up towards 108 perhaps, and then back down.
Yeah. Bro, you know what trade I'm so pissed I missed this morning?
Which
Should
one,
have just
bro?
woke up a little bit earlier. FET.
Fair. Oh, someone was asking about that yesterday. Let's take a look.
You got a support resistance liquidity pocket at like 76 cents, previous resistance, and then field support bounce.
Yeah, yeah.
It's on the 1 minute time frame.
Let's take a look. You had your balance over here. Oh yeah, that looks good actually. Yeah, that was a good
Yeah.
entry down there. Yeah, higher time frame wise, this looks so good as well in the sense that the levels you've gone to can only if is the areas where you hope this bottoms out, right? So if you get back above
Yeah.
99 cents, this thing's gonna roll.
Bro, I mean, I don't expect the Fed to go much lower from here
Yeah,
unless Bitcoin does, but you'd expect, as you said, this would be your support, right? If you're gonna have overall high time frame bullish market structure, you're going to have your accumulation and distribution, right? And the areas of accumulation compared to previous historical data is going to be higher, right? If you're in an
yeah,
uptrending market, when you come down to accumulate, it's going to be at a higher regional range than your previous level of accumulation. So that's what we need to hold now.
yeah, bro, 100%. Um, but yeah, this is even for swings, guys, these are very interesting areas. The only thing I've been saying, like I've been saying for my few videos, right? You have, in my opinion, you have more time than you think to build your bags out. If you're serious about actually swinging, again, when I'm swinging, I'm talking about like, okay, you're thinking like an investor, okay? You're not thinking about getting out after a week's time. When I say swings, I'm holding for like multiple months. I'm looking for like massive moves up back towards like macro range highs and stuff. If you're actually planning on entering any trades for those, right? You you are good areas to enter, but you do not go all in here. Okay, so I've talked to you guys about my entry strategy loads 20, 40, 40. You simply, depending on how far your invalidation is, you mix the ratios around, right? So for example, let's say your invalidation for this trade setup, right? Where would you not want to hold Fed, right? Let's say you don't want to hold Fed below 0.509 cents. Right? Logically, of course, you don't want to be holding below that. That take you into a completely new range. So how far away is that from CMP? Ask yourself that. Okay, that's 30. Let's say 40% away. You do not, you keep this at 20, right? I.e., your CMP entry is going to be 20% because you know that you have to be okay with stomaching a 40% drop, right, over time before we actually go higher. So it doesn't make sense to have a big initial bid. This is where people fuck up, okay? You think you just have to have a big dump and now I'm safe. You're not. You need to make sure you do not lose your money getting chopped up in this actual range. That's the hardest part. Okay, finding out, where the key levels are, that those aren't hard, right? It's actually managing your entry, managing your portfolio at those key levels. That's the hard part. Okay, the closer you are to invalidation, the bigger your CMP entry, your initial buy, right? Your market buy, the amount you're gonna buy right now because you want some exposure to this asset. You increase this ratio depending on how close are you to invalidation. So right now we're 40% away, but let's say you were 5% away from invalidation. It doesn't make sense to only have a 20% entry, right? That's not, now you're just being a pussy, right? If you're 5% away, increase your initial exposure, right? Maybe even go 50% if you're 5% away. Buy half your position there, and then you have half left over to do the things we're going to talk about within a minute, right? But you scale the
Nice
risk.
facts, bro.
Yeah,
Facts.
yeah, for sure. That many people mess this up, right? And if you're 5% away, increase your initial risk, and then you have some left over for, of course, the structure change and for DCAs. But it doesn't make sense to have a small bag if you manage to catch such a good entry. But now, after everything's pumped from that liquidation event, right? Many things are pumped up, many things are sat at resistance. It doesn't make sense for you to elevate your risk right now, right? If you didn't, let's say if you didn't catch anything, either you have a very small entry right now, you leave a large majority, and let's say 20, 40, 40, one half of that 40 is for either you DCA with when you recapture, critical supports back into resistances, or for if you go slightly deeper to your DCA levels, that's what this 40% is going to be used for. And then this remaining 40% is strictly for when the trend shifts back to an uptrend. If you're buying, right, that means you're holding for higher prices. It doesn't make sense to be fully positioned before the trend has actually shifted to confirm to you you're now back in a buy side market. Right, if you're still making lower highs and lower lows, it doesn't make sense to be fully positioned, right? You wait for the last lower high that led to the lower low to be taken out, right? That's your structure shift, and then you wait for the high low to come in very patiently, right? Whenever the high low comes in, it doesn't matter if it's higher than this price, doesn't matter if it's lower. When the high low comes in, that is when you allocate the last cash reserve that you have, because now this entry, once the high low is confirmed, you've got confirmation. Okay, the trend shifted back to an uptrend, and you're now gone from the left side of the V, right, the sell side, to the buy side, right, the right side of the V. Only then does it make sense, in my opinion, to be fully positioned for a move to the upside. Because with swings, guys, people get this messed up. You think you need to bottom tick entries for swings. Bottom ticking is great if you're scalping. Okay, for swings, it doesn't matter if you bottom tick. By the time your bottom tick's probably going to get raided at some point anyway. Right, so there's no point trying to bottom tick entries on swings. With swings, it's all about you're trying to build an average, right? So by the time you're actually fully positioned to your asset, you survived the chop, you've gone into an uptrending market, right? And you now have the probability of you getting black swan out and stopped is very, very low, right? You've survived, your portfolio survived, and now your average price is such that it's probably not going to get visited again, because this you built when the risk was highest, i.e. the safest entry is actually down over here, right? And then all you do is you sit back and you wait for your TPs to get hit, right? You don't have to do anything here. And if you actually TP at key areas and you come down, you can now actually have a bigger position size over time to expose and to just keep compounding with, right? But the biggest thing here is do not lose your portfolio. If you survived the actual liquidation, right, which I hope many of you did, don't then mess it up by actually getting chopped out once the liquidation ends, right? That's going to be extremely, it's going to be comical, I can't lie. Look, but don't let that happen to you. Okay, just preserve your capital in this area. Do not go all in. Like I said, 20-40-40, where you currently are, your macro extremities are very far away. So your initial, let's say you wanted to buy something right now, right, for long-term spot investments, that's fine, right? At the end of the day, you are still deep value areas compared to where you were even this time last year or 8 months ago, 6 months ago. You are very deep value areas, but that doesn't mean the value can't get deeper. Okay, so just manage your thing. Just realize that you have more time to size up with, you have more time than you think to build, right? You're probably going to chop around here before you actually get any serious moves back to the upside. And even if you don't, right, it's going to be much better for you if you actually catch that high low and then just enter there, right? Because at least you're not risking yourself to getting absolutely getting 40% of your port blown out simply by buying here thinking that this is the bottom. Right, that's it. Just risk manage. That's all I ask you. Just risk manage. As long as you risk manage your portfolio, it doesn't matter. I don't care what you trade, right? Just manage your risk or whatever it is that you're trading. But yeah, for swings, it's about just having a very, very good average with a stops that's probably not going to get hit now. And that's it. This was the exact same thing I told you guys. September, I mean, many of you were here, right, when I released the harmonic setup video, and we were looking at all the plays from the harmonic setup video, like every week on stream. I was telling you guys time and time again, 20-40-40, 20-40-40. You had plenty of time. Even if I go to one we looked at last for this was Aptos, right? This entire move up, you had loads of time to actually build, right? So the initial video came out September, we started building, right? Trend hadn't shifted, nothing had happened, so initial buy is here, but you're so close to invalidation, you do like a 40-50% buy here, right? And you leave 50% for when local resistance gets flipped to support, or when trend gets shifted, right? What happened for Aptos? Two birds with one stone. Once you broke above this, right, firstly you had a cumulative structure, right? We looked at that, but then your last lower high that led to the lower low got taken out, and then a higher low got put in, right? Plus, very key resistance got flipped to support. So in this case, you're not going to quote unquote save money for DCAs, because if this is, if this flip is successful, you're not going to get deeper targets, right? So your stop loss is already at break even, and all you're doing now is sizing up, right? So then the remaining portion you have, one for DCAs and one for trend shifts, we bought both in here. Why? Because the trend shift also happened and your higher low also came in, right? So then your average is going to be somewhere around here. And now you don't have to worry. You put your stop loss to break even and you just chill. You wait for your higher targets, right? You wait for your higher targets to get hit. Right? And we had loads of chop. We had the shark, we had the bullish 5-0 that sent us higher, right? So the bullish 5-0 came in over here. We had loads of different things going on. So just as a quick reminder, I think I have this marked here somewhere there, right? We had that shark, we had that bullish 5-0, and the bullish 5-0 propelled us way higher, right? These were areas where I said if you got in at the lows, this is a very good time to take some profits, right? This was the area to recompound. This was given on crypto chat and also in the live streams. And this is what I mean when I say you have more time than you think, because all you're doing, taking some profits, compounding, you're bringing the average up in a way that makes sense, right? You're not just full porting on one area where it's pretty much a coin flip whether you're gonna get liquid, you're gonna get stopped out for your entire allocation, or you're actually gonna go up, right? You didn't know that you were gonna go up. The percentage probability, right? The probability chance of you going up wasn't great until this flip happened. That's what confirmed you were now in an uptrend, right? Because that was your first sign of you've gone from the left side of the V to the right side of the V, right? That's what this was. So exactly same like we were doing back in September. Is literally you using the exact same discipline, the exact same tactics. So this is all I use for swinging. You can do this for leverage, right? If you're doing like a low leverage swing long, you're trying to really catch a swing long for for like a long period. You can do this with leverage as well. But with leverage, of course, you're looking for like tighter entries and stuff. But especially with spot, right? This way you always have some cash on the side. You're only fully positioned at the most logical area to be fully positioned. You're not fully positioned when you're still making lower highs and lower lows. And just mentally it's going to be much easier if you know that you have cash on the side. So if you go lower, you've got a plan for it. And you also know there's a plan if it does go high. You're not going to feel FOMO, because there's a specific trigger you're waiting for, which is the high low. And you understand that, okay, well, 60% of my bag's already in, right? And you only have that, let's say, high low allocation left. And whenever that does come in, you're gonna get in. Your average is gonna be nice. You're gonna be at no risk of getting stopped out, right? If you do get stopped out, it's gonna be a break even anyway. So it's a risk-free trade. You can step away, go out, enjoy the sunshine, go see your friends. You don't have to be locked in front of your screen 24/7. Right, so for spot, if you're thinking of entering spot, I just realize you have more time than you think, right? You're looking for specific cues from price action and structure to actually be positioned, right? That's the way I prefer to do things for spot, which is why I'm giving you guys that 20 40 40 like we were talking about, right? So let me just go back and chat over here real quick. Okay, so let me look at you first. I saw you adjust your harmonic endpoints to in between to make them on ratio. I've never seen that before, and I always thought this made the harmonics completely non-valid. No offense here, just interested if that's the valid in most place for you. No offense taken, brother. It's all it's all questions. So yes, what I'm doing isn't standard, right? So if you're going standard methods, you're not technically you're not meant to go and put it to the actual ratios. People normally do wicks to wicks to wicks to wicks, but the way I do that, basically I'm giving myself a little leeway, right? Because I take the actual ratios with more importance than any noise. The way I see it, if you have a ratio and you wick below or you wick above, for me that's noise. Liquidity grab, so on and so forth, right? Did your actual structure, right? The way I look at harmonics is more in terms of structure and price action rather than just like range extremities and impulses. Did your structure respect the ratios is what I look for, right? So for example, what example can I give? If I look at Fed, right? Let's go back to Fed. If I go back to Fed, right, obviously, if I turn this off once, let's look at a bullish harmonic, right? So over here, right, I've got a potential bat drawn down. It's not an 886 yet, so this isn't a full bat. But for example, I think what you're referring to is something like this, right? My B point isn't at the range extreme, right? My B point isn't at the range extreme, and some people disagree with this, some people are okay with this, right? So I obviously am okay with this, and the reason for that, like I said, is because I'm looking at harmonics in terms of structure and price action rather than just impulse waves, right? So I'm asking myself, was that actual ratio respected, right? So if we were to go ahead now and I was to click on here, click on settings, the 0.5 is about around $1.80. Yeah, there you go. If I was to go here and I was to put a line down, right? So I've got that I've got the level. Let me go over here, let me put the line down over here, let me go to settings, and let me paste that coordinate in, right? So this is your 0.5. Was the 0.5 respected is all I'm asking myself. And the answer is very clearly yes. Look, that 0.5 held a support, which is what I'm wanting to see. I don't care about how low did it go, right? Did the 0.5 hold a support? If you went towards the 618, right? Let's say if this was a 0.6, 0.6 or something like this, I'll just take this as a Gartley instead. Right, but this is closer to a bat in my eyes, right? So I'm going to take that 0.5. Was it respected? Yes. Look, you have one wick below, very clearly a liquidity grab. The majority of your actual structure is respecting it. Look what happened. You broke down from the 0.5. What did you do? Reconfirmed the 0.5 to be resistance before carrying on to the downside. Right, so that 0.5 clearly got respect. What got respected in majority wasn't really this wick extreme. Now you can take it as a zone if you want to, but I'm interested in the actual ratio. The proper ratio here is the 0.5. right? So yes, the 0.5 got respect. So for me, it doesn't matter if you don't go down all the way to the wick extreme. The actual 0.5 got respected. Support got flipped to resistance, right? Even over here, your distributive structure came in at the 0.5 before it sent you lower. Right, so for me, this is a valid bat. It's not a perfect 886 yet, right? Pretty close, not yet, but if you do get the 886, for me, this is a perfectly valid bat. So that's the way I personally do harmonics, bro. I know it's not, it's a bit hybrid, right? It's not the proper way that Scott Carney does it himself, but all I'm doing when I'm doing harmonics is taking a system that I admire a lot, that I really like, and just using it to fit my trading style, right? That's it. No problem, bro. Let me keep up with chat 1 second. The ABCD, you've got an ABCD 0.5. Yeah, on FED there was a very very nice 0.5 to 2.0. Yeah, brother, that was a very good ABCD. All right. That every time I do a stream, someone always screenshots. Right, like I say, every time someone screenshots this, I should just make one into an NFT. That's what I should do. Have an NFT section. Just create the biggest Ponzi scheme based on just like screenshots of messy annotations. Yeah, very Picasso like. Dream work, very Van Gogh. When you leave your kid in front of the jar. Oh, you guys are cold. You guys are cold. God.
Oh my gosh,
Alright.
cracking up.
Still feeling math class. Pendle is $3. Jesus. It's recorded winter, yeah. I'll put it on my YouTube as well. Yeah, Ondo and Hype, we'll look over that. I'll do a quick analysis now, guys. 1 sec. Hood, bro. I've done that in one of my previous. I've done it in many previous streams actually. If you look at one of my other videos, you'll find it there. I'll do it now, but I want to get through other coins as well, since
Everyone's been talking about Hood recently.
Say that again, sorry, brother.
I was saying everyone's been talking about Hood recently.
Yeah. Robin.
Yeah, ENS is still connected to ETH, Papu. It's for the names.
Yeah, progress. It's you can be, if you're a pure harmonic trader, you won't trade nothing but harmonics, then it makes sense to go down Scott Carney's teachings, to the book. But I'm not doing that. I'm not like a pure harmonic trader, right? I'll just take the bulk of what's useful and just apply it to my own style. So for me, it doesn't make sense to be like a 100% like conformist. Yeah, we'll look at everything now. Let's take a quick scan. Okay, so let's go to the top 10 first, right? Vanry, I've already said stop tab break even, right? Stop tab break even. I did buy a small spot bag simply because of where we are, like I said, right? So I've got 30% in my Vanry spot bag, and I've got 70% left to DCA with, right? So I'm no longer taking this on leverage for now, right? Because I don't know how long we're going to be here. I'd rather wait for the actual strength to come in before taking leverage plays, because I don't want to get eaten up in leverage fees before any significant moves even happened. So just purely spot on Vanry for now, simply because look where we are. We literally rated the lows, right? It's like if you don't buy here, where else are you gonna buy this? So that's lows here. We do have a slightly lower possible on Vanry, but it's like do we get there? If we lose this wick, then yeah, I'm just gonna cut. Like I said, that's the only reason I'm 30% in, right? So I filled in that dump, right? So about 17% away, let's say. If that gets hit, I'm just gonna close my spot bag and just wait until like key levels get reclaimed again. Right, that's what it is. Very very small loss, and I'm just gonna be compounding the profits we already made on Vanry on the move up so far anyway. So Vanry, literally nothing to be done unless you're looking to buy a spot, in which case, I wouldn't go all in yet, but just use the 20-40-40, adjust it to the ratios based on your risk to reward. Sol, right, this one, very very interesting. So like I was saying last time, Solana is very much within a trading range, right? So if I turn this off, what the hell? 1 sec. What have I done here? Okay, no, that's fine. So this trend line. Okay, yeah, there. This one goes to root 5. Lock that. That's good. Okay, so we're going to be talking about Solana was been in a new range ever since this breakout, right? So this was your old range. You broke out, retested. So this was your new range ever since this breakout and retest happened. The retest was also a perfect retest of this trendline breakout. So Solana, as long as you're above this trendline, nothing to say. This is good. If you break back below, then it's a problem. But it doesn't look like you're wanting to do that anytime soon anyway. Right? You're in this range. Last time we were talking about Solana, we were literally over here, right? So we were at this particular area over here. So where's the Tuesday? We did this last. We did this over here. So last time we looked at Solana, it was in this wick, right? We had this marked out in the last stream, right? Literally this area was marked out saying this is going to be your area to watch for resistance on Solana, right? Based on the fact this was just support and resistance on the 4 hours, right? Between this high to this now, taking this as a range, this is basically a range mid, right? So we got to that area since the last stream, and then we made rejected from that area, made a lower high, distributed basically, and then lost it, right? After that, what did we do? The significant thing is we lost the range mid, we come all the way down, and then we've gone, and for now, right, we've confirmed the range mid to be resistance. This was a very nice short. Why didn't I? One sec. There. This would have been a nice short to take actually. So you got a breakdown, right? Basically, what you're looking for, confirmation. You got the breakdown, and then you got confirmation of the breakdown being valid. So that's always beautiful to scalp shorts, right? On moments like that, back to your key levels. But I wasn't awake for that. That's what it is. Nor did I have my alert set up, so I probably
we gotta start getting up early, Weatherman.
Yeah, bro. I need to move to polyphasic sleep, bro. Just take power naps throughout the day.
That's it, mate. Literally 1 minute power naps.
Yeah, exactly. Okay, but you lost this consolidation. For now, you're below that, right? Look again. If you were to take this local range, if you were to take this as a local range, you're in the range mid. There's nothing to be done for Solana right now. You either wait for this to be support again before you get in, or you wait for a visit deeper into these levels. Okay, so long opportunity missed. I'm not in this short opportunity missed. That's fine, but I do have a long from this 86 down over here. So I'm not that fussed right now, but you know, this would be really nice. You can make some really nice money just scalping these, right? It's just high RR. You're just in and out really quick. So nothing to be done on Sol until basically, look, you have this 2024 level, 2021 level, at least flip that 2021 level into support. This zone here, right, basically, you go and flip that into support. You can start sizing up. You flip this into support, you size up, and then you write that into your next key level, right? You have this 12-month zone here, basically, that you need to be flipping into support. This was support, you can see, and resistance for a long time. Resistance, support, resistance, resistance, support, and now back to resistance. As long as this is resistance, and let's say you're looking to do fresh Solana bids, this is not the area to do so yet. You want this at the minimum, or you want this, right? Those are the only two ways now in which you're going to look for fresh bids. If you missed that initial one, just be patient. Okay, you're going to get this at some point, or you're going to get this at some point. Whichever one comes first, just take a trigger based off, you know, that scenario, right? But you're literally in the middle of nowhere right now, sandwiched between support and resistance. There is nothing in terms of risk to reward you're going to gain from being in here. Just don't do anything. Sit on your hands. If you're not in anything, good for you, right? Just wait until you get clarity on either one of the scenarios. If you get a drive up and you start getting wicks and closes below the 2024 mid, you can also take scalp shorts here. Okay, so basically shorting a move back into this range. You can take scalp shorts for one more move back down. Okay, so just keep that in mind. Over here, someone wants to screenshot it, go ahead. But somewhere around the mid, just draw a box, right? Easiest thing, just draw a box for this range like this. Here's your range. If you get any sort of move back up towards this area, anywhere between 2024 12-month seller zone mid and the mid of this box, and you SFP with candle body closes below, that is going to be a short trigger. Okay, probably like, you know, have a pretty deep pullback from that. There you go. But yeah, that's Solana. So basically nothing to be done. The only way you're gonna trigger something is if either of the scenario gets fulfilled. Either you flip this into support, and on the lower time frame, you know, you're going flip to flip to flip. On the higher time frame, you're just waiting for a flip of this into support. Doesn't matter where, just somewhere within this zone. Or you're waiting for a deeper pullback. You know, basically, if you get a pullback into towards, let's say, 197, right? Why have I got this marked out? I've got this marked out because this white box is representing the area where by the time previous week closed, this is where buyers were active. So, any defense from this area now is once again showing you that, where buyers were active once, buyers are being active again. That'll be a thesis to take longs off. Right, so let's say you get a pullback towards the mid again, you go back towards 197, 192, right? You do something like this, then, that's going to be something to long off, right? Any reclaims or any successful tabs, that's going to be something to long off. So, but where we are right now, there's nothing to be done on Solana. You're in the middle of nowhere, okay? In fact, what was once resistance, you have a supply zone right over here, textbook, is once again resistance, is what's going on. So just keep an eye out for that. Okay, so you basically flip this into support, your mitigated supply zone gets completely treated as a bullish area now, and you have a reason to be in it for the move up. But as long as you're below this, just wait. You get opportunities. At this point, if you're not in, like I said, you're waiting to get above this zone. Okay. So that's Sol. Let's keep it pushing. Let's look at Injective. Injective. Stopped at break even for me, right? We took profits on that move up, and then stopped at break even. I've got a small bag started on this again, just because fair value got filled and lows got raided. But if you keep losing, literally, like your previous weekly close, everything, like you keep trading below it, you could probably take a actually, if you wanted to short Injective, what you can do is start a, let's say, 30% Injective short bag here, and then if you get confirmation of these areas being resistance, you can DCA. But if not, just cut it if this gets flipped to support. Okay, but Injective is below the level you need to be holding, so this is a nice area for resistance for Injective. So basically what that's going to look like is something like this. Okay, on the lower time frame, if you get any more pulls into this level, that's great. Let me go to the 3, in fact. Right, so the local trend is still higher highs and higher lows for now, so I wouldn't short here per se. But if you get any sort of pullbacks up towards 1475 and you start seeing resistance again, then definitely somewhere around this area. If you get a pullback into there and Injective rejects, then I think you have a nice short trigger. Scalp to swing. Here. Right, as long as you below this and reject from this area, that's a short trigger. Even here, you've got a lower time frame fair value gap. Anywhere, any SFPs you get from this area could be a short trigger, right? If you flip this into support, just get out your short until you get back below again, basically. But Injective is below previous week close, right? That's never a good sign. If you're, if this is the area buyers were active in the previous week, right? So again, if I do this once, let me just show you what I mean. Buyers were active by the time this week closed on Sunday, right? And then what did we get after that? Well, if we go on to like the 15 minutes, let's say, what we get is the area where buyers were active, resistance, right? And then you get the move down, and then you get the move back up, right? The impulse back up, which is where we currently sat. And the impulse goes into the area where buyers were active, right? Buyers try to take control, but it's not lasting long at all, right? On the lower time frame, you raid up, but then you confirm distribution around the areas where buyers were active. Therefore, an area where buyers were active on the weekly close is now an area where sellers are currently in control. Right, so we have this structure building up, could very well, go and take some lows out pretty soon, if I'm not mistaken, or even something like this. Right, so locally speaking, at this area, it's very easy to manage a short, especially lower time frame shorts. Right, you're not swing shorting here. Don't get me wrong. I'm not calling you to swing short. I'm just telling you protect your downside. Injective is one that's giving you an opportunity right now, and if you get above this, you're going to get out because there's a high chance you go and actually take this out. That'd be your area where you take your short. Okay, so the 2 key targets. So I think there's actually a chance you do something like that, to be honest, right? But if you do get this, there's a really nice short opportunity to be had right over here, a pre-planned one. And if you get above this, basically if you're looking at 15 minutes, you get any, let's say you start getting 3 to 5 minute candle body closes above, just cut, right? You don't want to be in it, just cut. And then just re-enter if you get back below, right? You guys can tell, I'm a very dynamic trader, right? I don't just sell it and forget about it. I like to actively manage my trades based on the price action I'm seeing. But that's Injective. On the higher time frame, however, if we take a look, so if we go to INJUSD, right, you rated your 2024 12-month buy zone low, right? And that's held, which is the reason I re-entered with a small position here, and which is also why I'm very happy to cut should we lose this level again, because if we do lose that, then I won't be surprised if we went back down towards this areas, honestly, all the way back down towards here. In fact, that would give you a long overdue retest. Just notice that you did have a inverse head and shoulders here, never retested that breakout. That's a front run. Long do maybe something like this if you get one more flush, right? So if basically if we lose 2024 12-month buys on low, I'm just getting rid of my bag, right? And I'm only going to rebuy every time we reclaim this. Or if we go and do something like this over here now, that would be an extremely let's say confluential area to add back to your range. But yeah, this thing fell very hard, and it's a shame because when we were watching this, right, and especially back in September, the structure that was building here was absolutely phenomenal. You had a cumulative structure going on, right? Smiley faces all over the place, and you got a reaction of that, but you know, you just couldn't get above your 2023 12-month buy zone high, right? You just couldn't. So, you know, no matter what you want, you got to go with what the price action shows you, right? And then that just nukes you back down again. Let's look at Ethereum next. Now, this one was absolutely beautiful. Many of you will be very familiar with these levels, right? These are the exact same levels I've had for a very long time now, right? Even when we originally had this breakout in 2024 over here, it was in correlation to these exact same levels, right? These resistances we were having back over here in correlation to these exact same levels, right? This is the reason I told everyone to not write off ETH in September. Again, exact same levels, and today the fact that we've gone here is a testament to, like, you know, how significant these are, right? So again, just wrapping it back to that, just learn to find significant areas, right? Very few people know how to trade by, you know, looking for levels daily, right? If you're someone that looks for, you know, levels daily on a chart, right, those aren't significant levels, right? Significant levels shouldn't change on a daily basis. These things stand the test of time until you go to a new range, and if you break back into the old range, these are still going to be the significant levels. So as soon as we lost the historical price range 3 mid, right, we had the smiley face structure going for us, and in the YouTube video I released the day before yesterday, or basically just before this capitulation happened, where I released the YouTube video, and where I was saying I have a feeling they're actually going to nuke it lower because this smiley face has been building for such a long time. It's getting too obvious, right? This is a very specific smiley face you guys will be familiar with. This is a inverse head and shoulders, right, or the normal head and shoulders. I forget which one's which, but this is a head and shoulders. Right, so it was building, but it was taking way too long. And when something like this takes too long to happen, and you know, for me, it's just always like, okay, well, why are you giving people such a long time to accumulate, right? So in that video I released, I literally saying, don't be surprised if you do get this, and it was just a stroke of luck that, you know, I released that video when I did. But you know, after that video, we got that capitulation event, took us straight back to K inflection area, and then insane reaction off that, right? Very insane reaction off. So you no longer have that smiley face argument, but that doesn't matter, right? That was just one argument. You still have the fact that this is still a range, right? You're in your next historical range. You're in your next historical range. The lows haven't been breached, right? As long as you're within this range, you're not even thinking about, you know, 1,500 ETH or 1,000 ETH, anything like this. As long as 2030 is held, right, you're within this range and you're looking for moves back to the upside, right? That's what K inflection areas and historical price ranges are in my system. They're support and resistance levels now, whereas buy seller zones are support resistance levels based on what price action has come from buyers and sellers. Key inflection areas are key levels based around historical ranges, right? That's it. So Ethereum, again, nothing to be done where you currently are. You're at resistance, right? You've had an insane move up already. Again, if you wanted to buy some spot ETH here, like I'm not going to stop you, but if you do, I wouldn't put any more than 20% in, 80% for basically whether this happens or, you know, you go to fill that wick down, right? Because again, look, you're saying if you want to buy spot ETH here, look at this chart on a significant time scale. This is what you're saying, and logically, stop losses, you know, the closer your entry is, the easier risk management can be, right? But your logical stop loss here is going to be somewhere below this level, right? If you to account for historical price action, your stop loss is in fact going to be below these, because you know there's been some chop. Anytime you've lost this, there's been some chop towards this level before you've gone up. So you need to account for historical price action to have meaningful stops. But that is a 40% dump on a high cap like ETH from where you currently are. It doesn't make sense for you to be all in on ETH or anything like this here, right? If you were over here, right, let's say you were looking at these key inflection areas, and then you actually had, let's say, some limits on these key inflection areas, right? Then all of a sudden that 40% has been reduced to a 21%, literally, like, you know, way better. And just up to here you already have your RR met, for me minimum 3, right? So this would be a trade where down in this area, instead of 20, maybe 30, right? 40% is what you enter with. You leave 60% for you know, for DCAs or when local resistance gets flipped to support. But where you currently are, there's no risk management, right? Look, risk to reward ain't worth it either. So what's the point? So I'll just wait until you have some structure developed that gives you an area where you can actually manage your risk based around a candle yet to be developed, right? But your risk to reward is way better, right? As you can see right now, you are at resistance. It doesn't make sense, right? At this point, you might as well just wait for this flip. If the historical price range 3 gets flipped to support, right, or even this, right, just the mid of this box, what was one support, get that flip back into support, yes, you can be back into Ethereum. And then you can start putting, stop losses at least below local levels, right? All of a sudden, you got 6%. If something were like this were to happen, for example, and you have a manageable trade. But where you currently are, you do not have a manageable trade, right? So for many, this is the same as the video I released yesterday. If you guys watched the videos I released last night, what I was saying was, if you missed the move up, don't enter anything yet because we're sat at resistance, right? And if you guys listen, hopefully, it's you would have been, even though it's not a big move down so far, you'd have been safe from this little red day we're having today, right? Because like I said, many things were at resistance, they weren't above. So after such a huge capitulation event and insane buyback, you don't then buy the top of that, right? That's the same as you selling at that capitulation. You're just buying the reverse capitulation at the top now. So if you're leverage trading, that's, even though for a spot it doesn't seem significant if you're a long-term investor, but many people aren't. Many people are traders, right? For traders, it can be detrimental, right? Just executing at the wrong time. Even if you have the right idea, if you do it at the wrong time, it can be very, very detrimental. So this is still a resistance. So until you get a clean flip of this box back into support, I would just stay away from Ethereum, right, for now. When you do get a clean flip of this box into support, whatever local wicks come in, just put your stop loss below that, right, and then you can enter based on that. But that's ETH. Let's move on next to ETH BTC at a very, very pivotal area, right? So I was sharing this chart everywhere. It's been a few weeks since I started sharing this chart everywhere, close to a month now. But this chart, absolutely beautiful for me, right? So you lost your macro point of control. So I basically had two key areas in mind for ETH BTC. The first one was between this macro point of control and then the 2019 12-month macro read seller zone mid, right? So you have a macro point of control, you have your 12-month level. This was the first zone. You hit that, you bounced, but there wasn't any significant follow through. Loads of yearly levels above you as resistance. So then, your next significant area, if you lose this level, was then this, right? So you have from certain impulses, you have standard deviation 1 value area low of the high to low. So basically taking the impulse from this high to this low, right? That range, the volume profile for that range, the value area low was in this area for standard deviation 1. Taking the impulse from this low to this high, the volume profile for that had your point of control over this area. You have your 2018/2019 12-month buy seller zone low here, 12-month level. You have your 2020 12-month seller zone low here, another 12-month level, right? Plus you have a macro bat 886 plus a macro shark 886. So macro wave structures representing extreme deep value as well, right? So this for me was the extreme key area. So like I've told you guys, I've got 60k to put into ETH against BTC, right? This is my allocation for this. I'm not going to put any more because I want to be more heavy in ETH than I might in actual ETH BTC. So I've got 60k left to fill. I've allocated 30% of that in this dump, right? I still have 70% left. And the reason I'm saying that is because, like I said, I'm not expecting a V-shaped recovery, right? And even if I have to buy back higher, I don't care, because at the levels we currently are, I'd rather have market structure be safe than just try to go all in at once to, try and get that bottom tick for 60k, get greedy, and next thing you know, we get some more chop before we go higher. Right, so I'm 100 open to the fact that we can chop here, right? We definitely can. I'm just going to risk manage, right? So for example, if we go back down to entry, right, and I don't see any buyers stepping in, then I'll just maybe turn my 30%, either get rid of it depending on how vicious the sellers are, or maybe trim half so I only have 50% in and just spend that 15% again a bit lower, and then size up again when the trend shift occurs, when the DCA levels hit, so on and so forth. The exact same strategy I was talking about, 20 40 40, only I've gone for 30 instead of 20, right? So I've got 35 35, right? That's the ratio I've gone with for this one, because the bottom isn't technically it's the reason I've not gone more, even though this hit perfectly, the reason I've not gone 50% in, let's say, is because there's no structure for me to put a logical stop loss below, right? I want structure to develop here before I go heavier in, because if I was to go, let's say, 50% in here, I still have to be okay with the fact that, well, technically speaking, look, a cumulative structure has taken us back down to the value area low in the past, so basically it's fair game if we actually chop something like this, right? So that's why I'm not going heavy in. But these are now areas where I also do not want to be just sat on my hands, right? Which is why I'm just taking 30% exposure and have 70% remaining to add over time. Right, but ETH against BTC are very, very pivotal areas. This is the area where I want, structure to come in. If it chops, I do not care. As long as the chop leads to structure over time, that validates this harmonic, right? And that validates this being key support. A cumulative structure comes in, bullish structure comes in. That is what I care about. That is what I want to survive. But that's ETH against BTC.
Mm.
Let's take a look. What else do we have? We've looked at Bitcoin. We've looked at Aptos, but let's take a look at Aptos once more. Aptos also has M shapes completed, right? BAT 886 and a Shark 886 run up against resistance. So I took profits on some leverage bids that I filled basically at this area. This was very last minute, right? I literally saw this Aptos, BAT and Shark as it was happening. So I was scrambling for a position over here, but took some profits because I didn't have the optimum entry. It's not like I could like bottom wick this or anything like this. So at resistance again. I'm waiting for structures to develop before adding back into my spot bag again, right, to take this for round 2. Had a very nice run up on Aptos from my September entries. So just looking to compound that back in again. So we have Aptos, right? Again, this is what I mean, right? So many things by the time the daily close yesterday was literally at the yearly levels below, not above, below. Even though the candle is bullish, this tells you everything you need to know. You've not actually got above resistance yet. So then, you don't, even though it's subtle, it's there, right? Buys haven't overcome the hurdle quite yet. So you don't go all in just because a candle closed like this, right? Expect some more chop. And you're back at the weekly buy seller zone, right over here. Have I got that marked? I should, but I don't, so let me do it now. Where's the current cycle? Here, right? This is the area again, last week's close where buyers were in control. So if we get any sort of pullbacks back towards $6, let's say, right, $5.84. If we get raids of this, but then reclaims, I'll be long in here again, right? Because buyers are going to be showing strength as an area where buyers already showed strength. Otherwise, I'm looking for a move back down to revalidate this bad Shark 886, and I'll enter based on price action here instead. We have a fair value gap to fill on the 1 hour if we do decide to go back down there. So this would be a very nice entry should we get it again, right? Validate the harmonic and go up.
We got New York Open in 15 weather.
Yeah.
Seems like the London move's just been erased, basically.
Yeah.
Just chop. And yeah, we'll see how New York opens.
Let's take a look. Okay, Aptos, AVAX, another one I added to.
What, on spot?
Yeah, on spot, bro. I think I'm just building a really nice AVAX spot back just over time. The macro structure on this is too clean to ignore. What did we get on this dump? A, B, C. That is a 0.5 on the C. We've hit the 2.0, right? So we've got a completed wave structure. Again, lining up with the yearly levels. Yearly on the 2024, yearly on the 2023. And for now, same as Aptos, you're holding your weekly close, right? Or that's rather your daily, sorry, for Aptos, not weekly, but it should be a weekly too. Yep, right there. Your weekly buyer zone is currently being defended, right? If you get below this, then I might just de-risk a bit on the plays I have and just wait until we either reclaim or until we get one more rate stab lower to just size up again like that, right? But if you, as long as we're holding this, I think you just go chop a bit sideways and then just reclaim and go higher, right? So weekly FVG right over here on Aptos as well. If you take a look, weekly fair value got mitigated on this dump. So eventually, what we're looking for is a flip of this back into support, right? And this is going to be one of my triggers in which I size up, because you have a weekly bullish fair value gap that's been completely absolutely just nuked out of. You have a weekly bearish above as well, so I expect some chop when you get here. But eventually, I'm looking for a flip of this lower zone in particular into support to size up on some more on Aptos in the future. What was once a buyer controlled area, or what was once expected to be a buyer controlled area, got violated by the sellers, and then the thesis will be buyers have taken control back again. That'll be something to long on, right? So that's Aptos. But you do have again a completed wave structure here. You have an ABCD. Do you have a harmonic? Let me take a look. Do you have any local harmonics? Yep, 886, right? So internally you have a BAT, there you go, right? 886, 886. So the BAT is what is currently holding that BAT level right there. That was a deep wick, but the 886 is still in session, let's say, right? And do you have anything? If I go for 1 sec, so if I turn this off and I turn the ABCD pattern off once, when I say local harmonics, I'm talking about, yeah, there was a lot more on AVAX, right? That made me interested in this area. So the fair value gap had a godly, right? So if you look at that 618 and then 48 and then 1.618 and 786 here. So there was a 786 and a 1.618 of the godly here as well. That's been completely lost, right? There was there should have been 786 and 886 here. So 1 sec, I just realized I can do something here. Leave you on, leave you off. There. Okay, so this 7, I have a feeling that might be an 886 now. Perfect. There you go. So if we do base a low here on Aptos, right? If we do come and we base a low here, that also means there's probably a completed shark slash bat at this local area. Perfect. Okay, one sec. We have for an 886, you're looking for a minimum 1.13. Right? Well, actually, no. Minimum, you're looking for the length of the AB to be the CD, but I prefer to go with I prefer to put on the screen the actual reciprocal ratio, so 1.13. That's going to be taking you towards $60 Aptos, right? So again, from where you currently are, that's going to be more than a 2x, right? 127% increase in price. Even just a low leverage swing will take you a long way with trades with areas like this. Okay, guys, I'm saying, just don't get chopped out. All you need to do is build a position over time. Don't get chopped out. Don't care whether you're doing spot or leverage. Don't get chopped out. This is what you're looking to capitalize on. Don't focus on all the chop that's going on here. Don't be zoomed in here. Zoom out and realize where you are. Okay, you're back at very, very key areas, which means surely, hang on, not this, not this. Where's all the harmonics I've drawn gone? Not the Gartley. Not you. Not you. Not you. Okay, so let's just draw a fresh one. Which means we have hit from this low to this high, to this low, to this lower high, down to this. Right, one sec. That seems. This is distracting me. 1 second. 12 months. Let's turn that off. Okay. There we go. Right. So obviously that's a for me that right there, that's an 886. 0.4, 2.409, 898, meaning the 886 was respected. You have a completed bat over here on Aptos. Right. So let me lock that in place. You have a very nice completed bat here on Aptos. It doesn't matter if you come back to raid and then reclaim. This is the structure you want being held now, right? And this bat, if this base is as support, you've taken liquidity out. If this base is as the support, then you've got your harmonic targets. Of course, you can do the T1, T2. You can go harmonic extreme, so just straight up B point, and then you have the wave structure, right? Plus, given that this is an 886, this is where I'm gonna do a few things. So local harmonics, take that out, put it there, right? We're gonna allocate this better. Trend line, that's fine. So let me just create a group here first. Current harmonics, there you go. Lock that in place. What we're interested in is, do we have anything that can supplement our macro features now, right? So on the macro, just so you guys remember what we're dealing with, right? We're dealing with this big M shape over here. So if I go here, this big M shape, that is the wave structure that's in play. Terminal 1 has been hit. Terminal 2 hasn't been hit yet, right? Nor has the final bat target. So we're still eyeing those higher prices, right? So we have we have this potential, let's say, bat that could take us all the way up there, but this could take years and years to complete. This could happen next cycle, right? For all we know. So we're not gonna focus on that just yet. We're gonna look at more logical levels first. So in terms of that, we're looking at this firstly, right? What do we have? This is a 786 on the retracement for, and I had this pre-drawn out as a just in case we do get this 886, right? So we've gone to this 886 level. So once again, 886. There we go. Perfect. Let me lock that in place. We have a 786, 886, 1.272. So those of you not familiar with harmonic patterns, this is called a butterfly. Okay, we have a butterfly taking us back up towards this areas, right? Which again, if I open the macro, actually it's nowhere near the T2 zone, never mind. But it's a higher target, right? And this butterfly could be what actually leads us to take out the B point of the macro bat that we've structured our entire argument for AVAX around, right? That B point right there. So, this Gartley is very much in play if this D point gets validated, right? This D point will need to be validated, i.e. you need to base around here. You can't, start getting breakdowns and just absolutely nuking back down towards here, of course, to keep this harmonic validated. But for now, let me put that in current harmonics as well. There you go. Let me turn macro off. Right, so you can see we have loads of targets to the upside as long as this area bases. You've filled your weekly order block, you've raided liquidity. We just need some sort of basing, fill the wick perhaps in the future, and then go up. Right, but there's loads of targets for higher on AVAX, and so that's a local one, and we've seen there's loads, there's others as well, right? So if I go ahead here, and if I were to do this, right? So if you take from XAB, basically a 618, close to a 618, right? So you can think of this as a Gartley there's a godly target that takes you back towards the D point, somewhere basically in really nice PR zone, PRZ over here. You can see between these two D points, right? So you have two macro structures now taking you back towards that area, right? And of course, we've already looked at, this bigger move up, right? We've already looked at that one. So, even though obviously we've had a big nuke, right? Focus on the macro. Like AVAX still looks amazing. That 886 still got retap. This is still a type 2 for me, right? What I'm looking at like right now, as long as these lows don't get completely violated, everything that's happening here is just the ongoing type 2, right? This is just the chop happening regarding that type 2 retest. That's it, right? Look, you have your terminal 1. This is just a part of the type 2, and then in the future, I think that's when the compression is done, that's going to take you towards your terminal 2 zone. And we're not going to be surprised because it's not like we're dealing with a 4-hour harmonic, guys. Remember, this is a wave structure. This harmonic, if I do this, right, if I turn macro off, no, if I turn macro on but turn everything else off, right, once, and I turn this markers on, remember what we're dealing with. This is 2020 to 2022, 2 years it took for this harmonic to complete, and a further year plus like a few months for the actual harmonic to then come into action, and then another year, right, total for the type 2 to occur, right, from November of 2023 to August of 2024. So this is a 4-year wave structure that we're dealing with here, right? Don't expect resolution in a week, right? It's just what it is. Look at the time frame you're dealing with. This is a multi-year time frame, so it's going to take a while for everything to play out, right? But just, if you get focused too much on what's going on over here, ultimately, right, if the wave structures do get validated and we do end up playing this out, then you'll miss up on a very, very nice move up, nearly 500% on a high cap like AVAX. Right, of course, this could happen this cycle, who knows, right? But, it's you focus on the bigger picture for this very reason, right? So you don't actually get lost in the source, right? You know what's going on. There we go. But yeah, that's AVAX, right? Spend a bit longer explaining that one because I think, AVAX looks fantastic. It's going to be one of my biggest bags. Solana, AVAX, ETH, right? In terms of high caps, those are my biggest bags. The higher we go now, the more I'm going to be distributing Bitcoin, because Bitcoin doesn't have a risk to reward like these coins have now, right? So it doesn't make sense for me to just be hodling Bitcoin. Of course, there's always a stack I'm going to hodl as an actual investment. I'm never going to sell. But in terms of trading, risk to reward is, the higher Bitcoin goes and the more these alts keep basing in these areas, the more you're just going to take profits on my swing long and take profits on, the spot you have for trading purposes, and then just rotate that into these. You're just trying to catch that rotation. That's AVAX, right? Someone asked for SEI. We'll be looking at SEI. I do have a SEI spot bag opened. Okay, SEI stopped at break even for us as well, right? It sucks because we had such a good entry, right? We had an amazing entry on SEI, but this liquidation is what it is, right? They were brutal. They wanted to take all the wicks out. But even better because we've made profits. The remainder bag got stopped out at break even, and then you hit an even deeper level, right? So you just read that up again. It's just compounding 101, right? So initial plus sum was taken up on the move up, right? This was where that what did I say up here? I said you had a bearish 5-0. If you guys remember, where's that? Is it in key levels? No, it's not that. Right, let me find it. 1 second. Oh, this is going to be like finding a needle in a haystack. Right, there's your 886, right? That's what we originally went for. And another key thing to note is this 886 wasn't actually complete before, right? This shot, but now we're so close to completion. Just take a look at this. 873, 1.618 has already been hit. If you get even one more drive lower, basically I think we've got a valid shark. We've got a macro shark here. Right, we've got a macro shark, and if you get one more drive down towards the 886, even better in my opinion. Right, really go and just absolutely ping the hell out of this shark. But the actual thing, okay, which group did I put it in? Is it this one? Okay, so harmonic targets is there. 1 sec, guys, sorry about this. I got way too many.
Any questions from anyone?
There we go. So we have 863, 872 right over here. These were the two harmonics we had, and then based off this harmonic, basically based on one of the sharks, right? This shark right over there. If you've taken that shark, and if you've done from here to here to here, that was a 5-0, right? That's what we were talking about before. So let's just see. If this holds, we have W shapes taking us back up, taking us back higher. Here you go, right? So this could very well come down to be a shark if we get one more drive down. Depends how deep it goes, but even something like this, for me, I look at the shark more as a liquidity rate, right? So even if it's not a perfect 1.13, as long as it's a liquidity rate that rated the original A, and you know it's closer to a 1.13 than a 886, I'm not going to take it as a bad. I'm going to take it as a shark. Right, but yeah, there's going to be wave structures taking us back to the upside. So for me, you know, as long as this area holds, this is just one big type 2 to the wave structure that we had in play here. Right, there's your type 2, and we're just looking for some sort of base for the actual move back up here. Now,
this is your swing formation for me. So what stops is just settling up and then settling lower.
alright, let's take a look.
This was the one team. So if we just chuck just inside this zone for me, which is like
Swing trade and hold positions for months. Yes, for spot, I hold for months, brother. Months to basically however long it takes to hit your external targets, right? That's it. And you know, even some swing trades. If I open a leverage position with the purpose of swing trading, that's also going to be held.
Use this as SMT because of the
right.
Result.
NFTs on Sol. I've not looked at NFTs in Sol in so long.
You get confirmation. It's different.
Nice, nice, nice.
It's different.
Nice. Okay, so let's take a look. I'll finish through this list and then I'll quickly go through some coins that look good, right? That I'm looking at, and then I'll call it here, guys. Sweet. Absolutely instant. This had one of the craziest reactions, right? Sweet. Absolutely, just absolutely. Any work that the Bears put in just got completely outdone. Insane move back up. So even now, look, even everything else is down so hard, look at Sui, right? This thing's so strong. So I got a nice bag of Sui. That is the first time I've added to my Sui bag since the September entry we had over here, June, August, September, right? Since this, if you guys remember which one that was. That was this right here. So from the harmonic setup video, you know, all these M shapes that we had over here. So the entry we got from there on Sui is the first time I've added some to that. Right, I didn't add big or anything, but just, you know, a nice back to just re-up the amount of profits I've taken up on the move back up, because it's just strong, right? It's just so strong. Look at the reaction. Right, so I basically added when I saw that big liquidation come in. So if I turn group 1 off again, as long as this holds, like Sui's the only one that's having such a strong reaction right now off your previous weekly, right? So if you take a look again, same thing, right? This was your weekly close. Everything else you can see, like injective coins like that below previous weekly close, right? Weekly buy zone. This is one of the only coins where it's literally saying, oh no, I'm not even gonna test the 0.5. I'm not gonna test the bottom half. I'm just gonna tap the top and I'm just gonna bounce off it. Right? Absolutely ridiculous. Sui is so strong, very, very strong. I'd be honestly at this rate, I'd be targeting back towards 2024 12-month macro rebound. $4.12 honestly for Sui. Right, you have equal resistance here, of course, but back towards $4.12 is what I'd be looking for. So if I go over here and I do this, right, back towards $4.12. Flip this, back towards $4.12. But of course, that doesn't mean I'm telling you to enter Sui here. Hopefully you didn't take it as such. You can see we're at resistance, right? You need to flip this into support before thinking about going higher. But you flip this, you know, above 365, yeah, $4.12 is where you're going to. On Sui. Nothing to be done here right now, basically. Just wait for the flip, that's it. Absolutely.
Yo, sorry boys, I don't mean to have a hot mic.
Oh, it's alright, brother. It wasn't distracting or anything, so it's fine.
Yeah, New York Open pretty shit, huh?
Everything's being affected. Hang on, let's look at Bitcoin. What's Bitcoin doing?
Bitcoin's doing now.
Slightly down. Oh no, it's bouncing right now. Yeah, so that cumulative.
No, so you just got market structure shift almost.
Yeah. Yeah, so you have a it looks like a AMD or a PO3 for those of you familiar with what I'm trying to talk about. You have a range. You have a deviation of the range over here. And what I normally look for a PO3 is the deviation take out any, like, you know, sort of valid targets, right? So if you look through, did we have anything key here? This deviation took out 15 minutes. Let's take a look. Yeah. So this deviation took out these wicks right over here, right? This deviation took out some buyer zones here, basically. And now you're looking for your expansion phase. So the expansion back towards 108.76 in my opinion. You don't have anything. Stay laddering down, but back towards this zone is where I actually see structure. So somewhere here perhaps. Big zone on the lower time frame, but yeah, back towards here, I think. You have a 4-hour buy seller zone next to each other. You have a 4 value gap right over there. This is your resistance zone. Okay, if you can flip that into support, you're fine. But if you go up here and this turns back into resistance again, you have the opportunity to scalp shorts back to the downside. Okay, but this is just so if you're bullish, what you want to see, this basically, right? Simplified, of course, you could chop. Ultimately, this. If you're bearish or you want to catch some shorts, what you want to see going back into this area, if you get it, right? For me, this is where I would actually take the trade based on what's on my chart. Here, and then even if you wick above, closes below, right? Closes below, and on the lower time frame, that's going to correlate with a. Before you guys absolutely rip me to shreds, let me delete that. There we go. Go back up over here, and then some sort of deviation, right? Come up here, initial resistance, some sort of deviation, and then back below, and then some sort of lower high to confirm. Okay, this was just deviation and liquidity grab, and that's the short it would catch back to the downside. Right there. I'll keep an eye on it. Okay, where I'd got up to say, I believe, right? So let's go back to say. Right over here. No, we've done to Sui. So let's look at Ondo next, right? Sui we already know is strong, straight above the resistance we had just marked down. Absolutely crazy. Ondo is strong as well. Ondo is another one I added simply because what did we have for Ondo? If you look at something like, I think it was the 3 months, not the 3 months, it was the weekly. Not the weekly, it was the monthly. Yeah, there you go. On the monthly, you had a buyer and a seller zone next to each other over here. So basically what this means is you have buyers being active in this area, you have sellers being active in this area. Both sides are willing to bid is what's showing you, right? Buyers try to take control, sellers to control. Ultimately, sellers won, but that's not the important thing. The important thing is this is the zone where both sides were willing to duke it out, participate. That candle is nuts. You got a breakout. All you had is simply a retest to confirm, okay, which side has actually got the edge, right? You had the 6-month mid in this area. This is the 6-month July to December, sorry. Yeah, July to December 6-month mid, right over here, 0.5. Right, you tap that in correlation with this, and then just the absolute craziest reaction of the area. Yeah, that is, some of these candles are printing. This is a monthly. Of course, we have 24 days, so it might not be that impressive by the time the month closes. Imagine this candle turns green on the monthly. This is I've never seen something like this. Honestly, this is actually one of the craziest candles that's been printed. Because you see candles like this, right? You see candles like this. You don't see them on things like the monthly or something like that, though. Absolutely ridiculous. Hype. Okay, breakout again. So, let me see. What do we have? Higher highs and higher lows. Higher highs and higher lows. 2024, 12-month seller zone low. Flip back into support. That's what we were talking about last stream, by the way. If I go back to Tuesday, right? So we did this on Tuesday last stream. If I go back to the daily. Over here, right, we were looking at hype over here. So what we're talking about is don't enter hype until you actually get above, right? And you got above here. On the higher time, on the lower time frame, you would have had a flip, right? And that flip would have sent you higher. You rejected off a previous structure that hype is created, like in this initial move up. You hit a 1.272, just about front ran it, and then that gave you the move back down. I was really hoping we'd get hype towards this target, so I can't lie. I was really hoping we'd do so. I was hoping this would be deviation. I mean, it proved to be deviation to begin with, but it just gave us on the higher low. Right, so I did pick up some hype back at these levels. So this was the scenario we talked about in previous stream. I'm pretty sure we went over hype in previous stream. Or it's in one of the videos I released anyway. If this is the area we're actually watching for. If you lose this, then it's this one. You just never lost it. It's sad because this would have been an amazing entry. I would have loved to buy a big bag of hype here, but it's still okay buying hype here, right? It's not like we've waited until something's pumped. It's still this structure. It's just the greed in me saying I'd love to buy hype over here. But you flipped your 2024 12-month seller zone low right on the daily. So if you go to the hourly, what did you do? You broke above, right? Here's your breakouts. And then the last valid entry on hype was based on this retest. So what you've done is confirm the 2024 12-month seller zone low back into support, right? With this, we're not going to be surprised if this does eventually go up to 12-month seller zone mid. That'd be your ultimate target for this next move up, right? This impulse, and then if you flip that, then higher, of course. But we know there's other resistance in the way as well, right? So for example, on something like the 4 hours, this entire consolidation block can be seen as as the distributed block, i.e., this is your order block, basically, right? This is your supply zone over here. So if I go ahead and I was to just go and do this, for example, like this, and what about if I did this on the 12th? Would that make more sense? Perhaps, you know, depending on, you know, you can go to this wick or you can go lower. Oh, I'm just going to go to that wick to create the whole zone. Yeah. That B point of your ABCD, that is the mid, right? So that's going to be your next target, okay, for hype. As long as you're above the 0.5, that one, 2707 to 2703. If you go and flip this into support, then 2848 to 2979 is where you're going to be going for. If you don't flip it to support and you distribute here, then again, you might be able to scalp a short in this particular area. Okay, catch a short. What you're looking for, ideally, especially on the lower time frame, again, you want to see some sort of distributed structure coming in, ideally, right? This, and then a deviation, and then reconfirmation of resistance, right? But let's see what happens. So right now, you're attempting to flip the 0.5 into support. That's happening here. As you can see, breakout again, retest, successful retest. That's going to send you higher. But that's hype. If you want a bid spot here, right, I'm not going to say no, but again, if you bid here 20, 40, 40, you're not going to have a big initial, okay? Again, we're going into resistance, so if you decide, you know, you can't live without buying hype right now, going with low position size, because you're going to have plenty of time to add on these flips, okay? Because, you know, you, like I said, you're watching for the bulk of the move up. You're not focusing on, you know, this tiny range. But, you know, wait for these resistance to be flipped into support at least, right? You know, you have to flip this into support. You have to flip this into support if you want hype to make a new range entirely. Loads of work to be done still. For a higher time frame, spot plays, basically, don't even fret. Don't even fret. So like I said, for many coins, for me, I'm in like, you know, if for those are caught in the actual liquidation dump itself, I'm in with like 40 to 50%. For those are caught after a bit of bounce had already taken place, right? We've already had like a 15-20% pump off the lows. I'm in with like 30%. So I have a lot of sizing up to do still, right? So I'm just waiting for the market to show me signs to size up. 1 hour, yeah, but the hourly there, that's beautiful again, right? So let's see what we get over here. That is a breakout. Did you have a retest of the breakout? No, you didn't have a retest, so don't be surprised if you do, like, you know, if you do catch that short, if you do something like this and then go higher again, right? There's you always have more time than you think. You always have more time than you think. Let's go back to Bitcoin once, see, since we've gone to 100k, what are we doing?
Yeah, we're at 100k right now. Open up along at 99.2.
99.2, nice one, bro. Yeah, that's down over here.
Yeah.
Okay.
Currently up on our.
Let's take a look. Trump. This is one. If you guys have been watching my videos, I've been trying to release a lot more recently to just keep up with all the volatility in the market. You guys will be familiar with this level, right? That was the mid of the breakaway gap on Trump, right? If you look at Trump on the 4 hours or whatever time frame, lower time frame, there's your breakaway gap. Trump was already listed before, and then, you know, once that news came out, they actually sent this higher. You had this huge breakaway gap, and then you propelled up, right? We did hit the mid of the breakaway gap, right? So I did open along at that like 1588 area. And I'm not closing my short yet, so I've still got that $74 short open on Trump, but that's because I don't see signs of bottoming yet, right? I only close the short when I think the bottom is in. It makes sense, it's a swing short. So, but it's very close. If we lose this 1588, right, then we have a very, very nice bat that could come into play. 0.5, right, 634, basically 618, down towards this 886 is what I'd be looking for, $10.22, right? And I don't think Trump would get much lower than that. That 886 is going to line up with the bottom of your breakaway gap as well, i.e. the top of this wick. So if you get this, you know, I think, but depending on the price action we get here, I'm going to be getting into a nice position size Trump long, because that's going to be like, you know, again, deep value, right? 88.6% discount, and hopefully, like, you know, I'm not saying Trump's going to go back to all-time highs, but even if you get a relief pump from here back towards, let's say, like, you know, just the B points or even just the T1, that's going to be, you know, like a 200% pump, right? So that's something nice to catch on leverage. So definitely want to keep an eye on, but, you know, this bat isn't guaranteed. You could very well structure around here. So all you're waiting for is shift of trend, high, low. If something like that starts to come in, I'm going to scale out my short even more and just scale into a long more to try and, you know, just catch that move up on Trump. So keep that in mind, right? Keep this harmonic target in mind, 10.223, and keep 15.88 in mind as well. Next, let's look at Doge real quick. Doge, Another one, really nice capitulation wick on Doge, stopped out the non-believers and retain market structure, right? Front run your 2024 12-month buy zone, macro read buy zone mid, right? So it's just basically showcase insane demand. Of course, you had weekly, you probably had monthly as well, fair value gaps in here. The mids of those got tapped and respected, and you're above your key resistance, right? There's nothing more you could want from Doge than this. This is beautiful. Very, very beautiful. Again, if you decide to buy some spot Doge here, 20, 40, 40, right? Now, how are you going to DCA? For me, you're going to DCA firstly. I don't typically limit on DCAs, right? Unless I know I'm going to be like away from the charts and I really want to catch that DCA. And even then, if I do limit on DCA, I do so with reduced position size. I always look for confirmation before fully sizing what I think is my allocation. But two things to look for. First things first is, do you get any taps back into this box here, right? And I can actually shift this box like this now, right? Make it a bit wider. Sorry, narrower, not wider, right? Do you get any taps to that box there? And if the weekly were to close like this, right? Hang on, let me do this instead. So this is your new fair value gap. Right, the mid has been respected, but basically any drive back towards this region on Doge, if that happens and buy step in, maybe even go and hit that 2024 12-month buy zone mid before you go higher, right? In these regions, I want buy stepping in, signs of strength in these regions, right, on the lower time frame before I start scaling into my DCAs, right? So on the hourly, right, I want to see successful candle body retests at these areas, right? And then based on that, once you see like, okay, this buyers are stepping in at this area and it's been regarded as support, then I would DCA at that given area. So this is on Doge. So 20, 40, 40, you can have spot allocation, and you're either going to size up with the DCA / trend shift, or you're going to size up when this 2024 12-month sellers on low gets flipped into support, right? Those are your two different size up triggers. And that is also going to correlate, for example, with if you were to go back here, take out the last lower high that led to this lower low, and then put a higher low in, then that size up is going to be two birds with one stone. That's going to be your trend shift size up, and that's also going to be your key level being flipped to support size up, right? So that's that to watch. So have an allocation to mess around with here, and have allocation to size up with when you actually get up back up over that key area on Doge. There you go. And last but not least, let's look at PAL, right? This is my AI play. Beautiful structure on this, 886, right? Type 2 of the 886. You have AMD model in this. You have hit another 886 for the Type 2 itself, right? So I'm in this for PAL. T1 zone's already been hit. You're targeting T2, you're targeting the final bad target, and probably new highs, right? If AI really picks up, this could go much higher than what the previous all-time high was. So this is still manageable on spot, right? With this, you could go like I said, 20-30% for spot. Just have allocations for when the trend shifts back into support, when local resistance gets flipped to support, and allocation for DCA should you go back lower. The only way I'm going to be cutting PAL is if you genuinely go and lose that 886, right? So in validation, if you decide to start building a position on PAL, is lose that 886 of the bat at 0.10790. That's a lot of range for you to be working with right now. So if you're not happy with working with that range, this is a extremely, this is a shit coin basically right now. Okay, this is a low cap. This is not like a mid cap or anything like this. So if you're not happy with that range, then just either reduce your position size allocation wise anyway, or look for your own lower time frame triggers to get around. So for example, like I said, get your last weekly buy seller zone down, which is right over here. And then if you ever lose that, then you can just say, oh yeah, I'm just going to cut as long as we're below this, and anytime we reclaim that, you can just get off, right? You can manage your risk much easier than having to deal with a 100% dump in price, or a 50% dump in price, sorry, yeah. So this is what I'd be, if you don't have any allocation to PAL whatsoever, this is the one I'd be going with for invalidation, okay? But, the reason I'm saying this for spot mainly is because at areas you currently are, it doesn't make sense getting chopped up on leverage for many of you, especially if you're not experienced, right? If you don't have a track record of being profitable, you're not used to these liquidation events, how to play them. This is your first cycle. If all of these, if every single thing I'm saying right now is ticking boxes for you, then in my humble opinion, you just buying some hefty spot bags here, right, and just holding is going to take you way further than you trying to trade. Okay, learn to trade. I'm not saying don't learn to trade, but don't do that with your entire portfolio of allocation if you're new. Leave that to the experienced people. You'll get there one day, but you've got to earn the right to do that, in my opinion. Otherwise, you're going to get humbled very, very quick. So a few others to look at. If I go to focus V2 now, I'm gonna just spacebar through this, right? LDO is, in terms of structure, one of the best coins in my opinion, right? So I've got to back at it. So like I was saying last stream, ETH and ETH betas, right? I'm looking to get into, right? If you look at LDO, even in the face of everything that's happening, all the other ETH betas are dumping. This is down only 1% compared to 6, 5, 9, right? LDO market structure wise, accumulative. Look, smiley face is still in play, right? Even in that nasty dump, you actually didn't. This is the only coin that didn't actually break structure. Even Sui, Ondo, they broke supports, right? This didn't break a support. So I just have a feeling they're gonna come out of nowhere and slam some really good news on LDO on the timeline. That's just gonna propel this thing higher. So I have a feeling it's coming. Normally chart predates news, so that's just what I'm thinking right now. If this is lost, then that theory goes out the window. We probably get that 886, and I'll look to start get into it there. But LDO right now, as you speak, if there was one ETH play, you asked me, okay, outside of ETH, what would you get into? I'd actually recommend LDO, just in terms of strength, right? Look how strong it is at a very significant area. Just one line. I don't need to do anything, fancy fall, nothing like this. One very clear line that's been accumulative. You have your accumulation, distribution, not distribution, sorry, manipulation, right? Deviation, that's what I'm trying to say, and then reaccumulation. I won't be surprised if this this goes up. LDO looks really, really good, in my opinion. This looks
Yeah,
really
I had a TV alert set for 1.6,
yeah,
but I missed that yesterday.
yeah, bro. That would have been a nice entry, to be honest. I hope we get a revisit down to these areas, but yeah, this is really, really nice. The structure here is so good. Trend wise, you're in an uptrend, right? If you look at on the weekly, last lower high that led to the lower low has been taken out already, so the trend shift's already happened. So yeah, it's just a matter of when is it gonna pop, right? This is just where you slowly, these are the areas where you build exposure, right? Not because you think this is it, just because eventually, as long as this sentiment and this market structure holds, you're gonna go higher, right? So that's LDO right over there. And that dump, for example, if I do this, if I go from that A to over here to over here to here to here, let's just pin that down. We have a 0.5 basically, near enough a perfect 0.5. Yep. So if you've got a 0.5, then we know a bat is in play. At a minimum, right? You're looking at wave structures like this to take you back towards $3 LDR. Right, back towards range highs basically. So even if you don't break the range highs, go to new highs, doesn't matter. You can still catch a really, really nice return, even from where you currently are. It's still basically a 2x. Right, but again, if you didn't, let's say, if you don't have allocation to LDO already, should you do full ports here? No, you shouldn't. You shouldn't do that, right? 20 to 30% allocation. You're gonna have lower time frame. You're gonna have to be more active. You're gonna have to go on the lower time frame to actually get those market structure triggers, like I've been saying, right? Either local support being flipped to local resistance being flipped to support, size up, right? Local trend shift on the 3 minutes, 5 minutes, 15, 1 hour, whatever, size up. Because if you don't stay there and you just buy 30% and then you just walk off the charts, you're gonna miss the triggers to actually size up, and you're only gonna catch 30% up, right? What's the point? So if you go down this method, just understand I'm asking you to do more stuff. You're gonna have to be more active, more dynamic with your trading strategy. But in my opinion, it's worth it, right? It's worth it. It's all in the name of risk management. So that's LDO, right? OP, very deep here. OP, no, in my opinion, if I have a very, very small bag of OP opened here, literally 20%, because I'm not interested in holding OP at these levels. I'm interested in sizing up once with key levels, right? Once you get back over these key levels again, right? If we stay here for a bit longer and chop, I might add another 15%, like 35-40% total in this range. But I want to be above this before I even think about sizing up, trend shift, anything bigger, right? Because something like this looks a bit ugly now. Yes, the lows have been raided, which is the whole reason I entered the trade in spot, right? And a small swing long, relatively small anyway. But over here, you're still below your many key levels, wave structure wise, right? Things like this, your actual key support resistances, you're below those, right? So you've raided the lows, you're holding your yearly levels, which is great. But for more, for let's say momentum, you kind of need to get the ball rolling. You need to get structure builds above these areas again, which is where I'll be looking to size up. So for basically for OP, if you haven't actually already entered, then like I said, based on the previous weekly close, right, that area, you can try and get a small bag in. But honestly, I'd say for most of it, wait until you get back up a bit, because even if the price is a bit higher, the chart's going to look so much better, right? So that's why I'm saying small allocation here in terms of percentage of your total allocation to OP, and then when you start seeing strength coming in at the levels that seriously matter, right, in terms of structure, then you size up there, validate the harmonic, create some sort of smiley face structure going into cumulative, and then send it, right? Something like this is what I look for on OP. Arbitrum, again, I opened a 30% bag on this in this dump, but that's because I already had this level like pre-planned, right? But this is, again, this was happening in the actual stream I released just before the capitulation. Many of these were very last minute because I was looking at them as basically just before they happened. They looked ready, but ARB had a 0.5 and a 2.0, so like A, B, C, D, right? That's the whole reason I got into this. The reason I didn't enter with size, who on earth in the right mind is going to enter with size when something's literally broken its exchange listing lows? Not me. Right? It doesn't make sense to be 100% allocated. Look at this chart. You can't tell me this chart is bullish. This chart is not bullish. Okay, so when I say I entered ARB, I'm not here to tell you, look, ARB is going to be the next big thing. It's bullish. This is a very bearish chart right now. Okay, extremely bearish. But it's the fact that, you know, you've raided the entire range, right? It was a big capitulation wick, and then you've hit a deep extension target. For me, that I'm not buying there because I think, oh yeah, I'm getting a generational entry. I mean, there's a part of that to that, I suppose, but it's mainly because just the schematics of it all. Big capitulation wick. You've raided all the lows. You've hit a very deep extension level. There's going to be some sort of buyback. Right, so that's the whole reason I entered only 30% in this long. Just willing to risk some here. I'm not going to be sizing up until we start building structure above here again, like I said, because that's where the actual, like, exchange listing low, the shark 1.13 to 1.24, where actual structure is, that's above here, and you're below that for now, right? But if these do, because it's like, the reason I'm not gonna full port is because you don't know if this is the low either. Just because it bounced doesn't mean this is the low. You could go down and make a new low, right? You always think this is the low until a new low is made, right? You think, oh, this possibly can't go any lower, and then it goes lower, right? So until now, I just want confirmation of, okay, buyers are actually interested in this asset again. If no one bids here, that's going to be telling me no one's interested in ARB. I'm going to put my stop loss to break even on my spot bag, and then I'm just going to be out. If I get stopped, I get stopped, right? And then if I reclaim, I'll just build on the position here. But if no one bids here, you're telling me ARB that went from, all the way up here, but it was all-time high somewhere around $2.40. This thing's dropped to 33 cents, right? And no one's buying. That's not bullish. And why would you even waste time with charts like that, right? You want charts with life. This doesn't have signs of life right now.
Yeah, I don't like Arbitrum personally, just because I know it was originally an airdrop coin.
Airdrop coin, yeah, bro, exactly.
Yeah. What's the XRP doing? I keep getting trading view notifications.
Take a look. XRP.
Breaking out of resistance. Would have been a lot nicer at London Open though, at 2.5.
Yeah, would have. We've got the retest of that area I was talking about in my videos. That harmonic target that was your original target for the harmonics. You flipped that in the top. And then, yeah, what was once resistance, it's still being treated as resistance here. Below 275, it's a bit fishy, but
Yeah.
But at least you're trying to hold an area where buyers were active before. So on the weekly, this is the area where sellers were in control. You're at least trying to put the low of that as an area where buyers are trying to take control.
Yeah.
But yeah, I think above 275, this will look much better.
I moved my stops to break even on that Bitcoin long right now. Currently up 80%.
Nice, brother. Nice.
I'll let it ride.
Did we spike any higher on this, or did we just front run? Yeah, we front run that. One sec, let me.
Yeah, New York's open pretty shitty.
Yeah.
Yeah, the 1K candle on Bitcoin, but.
Okay, focus V2. Let's finish this up. Okay, so if you want a GMX, if you are someone that likes DEXs, another one, but GMX also looks dead, right? So this is not something I would be in right now. Only enter this if this reclaim happens. I had this drawn down as a potential accumulation, manipulation, distribution box, right? That's the whole reason I've got this here. But if no one even bids after the manipulation's over, we need to reclaim that 886, that low. Only when that happens, get into GMX. Not yet. Something like this. If that happens, that would look very nice, especially if the low gets raided as well. Right, so you'd have a shark, AMD model, type 1's already hit based on the September entries, right? Harmonic setup video. And then reclaim. You're just saying, okay, you have accumulation, you have manipulation. So people who actually accumulated here, anyone who wasn't, let's say, in the know, like the market maker or whoever the market makers were, they're going to be forced to cover, right? Unless you've got deep pockets, no one's going to be holding when something's breaking down to its literal lows. And then, reaccumulation again to confirm with structure that you're going higher, and then I'll take that towards T2. But this will of course need to correlate with Arbitrum also showing signs of life. If Arbitrum just dies as a chain, then this isn't going to hold. So that's why this is a conditional entry basically. The condition is reclaim this, along with ARB reclaiming its lows as well we were talking about. Few ones to look at though, Polkadots. Okay, so I'm just gonna rapid fire some harmonics your way now. Polkadot, here we go. 886 hit, right? So literally back at the same areas that we were at again back in September, right? So September entries were here based on this harmonic. We took the harmonic targets out, and this is basically a type 2. You're straight back down to the same area. Completed another M shape, right? 886, 2.61 into the bat. Rated the mid of this key level, and now you're trying to stay above it. As long as you are above this zone, right, it's okay to build a position on ARB. If you get below that, just cut it, in my opinion. Just I'll do it so that anytime you're above this, you're building positions. Anytime you're below, just get out, right? So you start to turn this into resistance, just get out. You get back above, you just get in. Set some alerts. It's going to be some work to do on your end, but it's going to be very good in terms of risk management, right? Barely losing anything while trying to maintain your portfolio balance. So Polkadot at areas you shouldn't fade, right? You fade Polkadot up here, sure. If you don't want to buy this, that's fine. But if you're interested in any coins that are at areas where you can very easily manage your risk here, Polkadot's one of them, right? You're at range lows. I have a sneaky feeling they're going to raid these at some point, just because the amount of times we've tapped this. I have a feeling they're going to do something like this if we do get any more black swans, or one more macro flush. I have a feeling they're going to do something like this, just take out that, hit the liquidity. If that happens, even better. When that reclaim happens, just get in then. Okay, but you're currently at areas where you can actually manage a risk around Arbitrum. And again, just use the 20, 40, 40. And if you're going for this mid, this doesn't even need to be 20. You can actually go with 40. And then 30 here, and then 30 here, right? Because if you're going with this invalidation, basically the middle loss of the mid and these levels as your invalidation, then you're not that far off. So increasing your initial makes sense here. Okay. So Polkadot's one, another one, NOT, right? NOT. The only reason I'm pointing this out, don't enter anything on NOT right now. This looks absolutely horrendous, absolutely dog shit. But should you in the future go and reclaim this 886, the 2.618 to the bat, and also the 2024 12-month macro read buy zone made into support, then you will have a chance to revalidate this harmonic, right? And that is what I'd actually long into. So again, NOT is a conditional one. Otherwise, there's no point touching this here. There is no signs of life. This is just this big sell-off. Don't touch this otherwise. Conditional one. Magic Eden, same thing, a very conditional one. Yeah, actually, you know what? Don't even look at this chart. Just wait for this to flip if you want to enter anything. Otherwise, yeah, it's cooked. Forget about it. Farcoin, we looked at that. As long as you're above these key levels, you're fine. If you lose the mid, I'd be very worried, right? So I wouldn't want to lose the mid. Or if on the hourly you go up and you once again confirm this to be resistance like this, right? You have local resistance here as well. So if you start SFPing at this area, so actually let's do this a bit better. Let's go to the 4 hours. Or the daily even. What do we have on the daily? We have a daily buyer zone right over here. Right, there's a daily buyer zone right over there. If you go back to this area, and you're currently already rejecting off it, right? So if you go back to this area, let's say you have one more spike up to the mid, right? You can actually start building shorts on this now if you want. Don't go all in yet. You're waiting for price action to hit the mid as well. So the reason I'm saying you can start building is because we might not get the mid, and this would still be valid distribution to take you lower. Right? So you can start building, let's say a 30-40% entry here, leave 60% or something for price action to be confirmed at this area. If it goes here and you SFP and close below, that's where you size up with the remaining 60%, right? And then you put your stop loss above the there's going to be a candle where there's going to be aggressive buyers, right? The candle that actually attempts to take out a few wicks. You put your stop loss above that basically, and then you target the lows based on risk to reward and key levels. But Farcoin currently at an area where if you're thinking about longing, don't do it yet, okay? If you think about longing, just wait until this happens. Very simple but very effective, because you're at an area where buyers were in control in the past. Currently, buyers are not showing control in the same area, right? This is distributive right now, so you can start building a short on Farcoin here if you want, with a higher DCA area between the mid and the top, right there. And if you start closing above that and retesting this to support, that is when you just get out of your get out of your short. And you don't DCA just because you go here, you DCA if you go here and sellers take control. That's the important thing, right? Otherwise, just wait for that close above and just cut your position. You'll have only entered whatever you entered here. You haven't even touched your DCA cash. You'll be fine, right? Small loss compared to just entering everything and taking a loss on the whole position. So as you guys can see, right, everything I do, my trading style is very much like I like to see what's happening, right, reading the price action in between the buyers and the sellers, so on and so forth. Okay, Maker, another one to watch. This one, guys, this was originally in the Home Running Setup video, right, September, that I released. This was one under the uncompleted section. Right, this was an uncompleted section. It has finally completed. The 886 has been hit, lining up with a monthly fair value gap right there, right? So very, very key area. Monthly fair value gap, 886, you have a bat. You also have ABC, that's a 0.5. You have a D, 2.0, right? You have an ABCD in this area for another addition to the PRZ. And if you do the XABCD, you also have hit the 1.13 extension. So if Maker bases around this level, right, and you can have one more spike down, it doesn't matter, as long as the high time from counter body closes respect this area, you have a potential shock that could take you up to the 1.13, right? Of course the 886 is going to be your first target, but the 1.13 is very possible considering you have all these wicks left to be taken out, right? So this is very much on the higher time frame. Like, don't fade Maker at these levels, right? The reason I wasn't listed Maker up here because I knew the deep value level hadn't been hit yet, but now it's been hit, right? It's been hit now, and if we can confirm along with this weekly bullish divergence, right? So like by the time this weekly closes, if we can confirm weekly bullish divergence here, let's see, on the higher time frame we have 2-week bullish divergence, right? Anything, if we can confirm weekly / 2-week bullish divergence across these two time frames, right? This higher time frame bullish divergence is here now, right? And I think the follow through from that could be very, very nice in actually helping us take Maker higher. Right, so Makers are very, very interesting areas. Do not fade. Right, I did start a spot bag of Maker at this areas. It's very, very easy to manage your risk, right, for obvious reasons. I've got 40% in. I've got 60% left to DCA, right? So that's Maker. Metis, there's a few, right? These are literally just space bars and some random coins that came on my screen that had M shapes. There's loads more I haven't even looked at yet. I still need to look at, right? Metis is another one which is at a type 2 of completed wave structures, right? You have type 2 of the 86 of the bats, the shark 1.618, 886. The lows have been raided over here. The demand zone has been raided as well. This demand zone has been filled. If you go and you start showing acute signs of accumulation here now on Metis, right? You start to see buyers defending. You start to see based on if you go to the daily, for example, right? Yesterday's daily buyer zone was right over here. If you get any sort of pullback towards the mid of this or even the low, but then you see buyers are defending this area, right? 2280, so on and so forth. You can see constant defend from buyers in this area. Then you can open, if you're not in Metis, very, very easy area to open a position size. Okay, and again, invalidation is going to be for me if you lose $16.13. So especially if you come down towards 22, I'd say 30% good initial entry, and then leave 30 to 40% good initial entry, and then leave portion to DCA with between 16.13 and 18.56, because we can see that is extremely key support right over here. You can look at that, and then if you get below that and breach it, that is where I would cut. But yeah, many coins, amazing areas, guys, right? DYDX, you've pretty much rated the entire lows, right? The macro shark 1.618 is right over here. And interesting yet is if I do this, the shark, it can go from 886 to 1.13, right? Look at that. Look where you bottomed out. That is a near enough perfect 1.13 shark on DYDX. Right, at a level we already know it. We know the shark 1.618 is there. Right now, of course, this is one of those ones that's still struggling against previous weekly close. So until you basically go and recapture, there's no point thinking about entries here. But if you do this, DYDX is going to be another one where it's going to be very easy to manage a spot entry or a swing long even. Right, very, very easy to manage one. Straight back up to the upsides. T1 has already hit now. You're just looking for that terminal 2 back up. And if that's the case, then of course we have from this high to this low. The low is here to this high. They're enough a perfect 0.5, right? So I'm just going to pin it to the 0.5. That is a 1.13. You have a shark taking you back to the upside as well, right? Either 886 right here. Your first target would be that 886, and if you wanted to raid liquidity, make a new local high, 1.13 all the way up there. Both of these sharks, 2.24, 1.13, 1.618, 886 are within parameters. So this would be an extremely, extremely bullish shark, right? All we need is confirmation that DYDX has based at these areas. And just zoom out, you can see, right? You know, you've got time to build this chart. You need to accept above this entire zone realistically for you to be confident in this move up, right? So that's what I mean. Like, it's, you just have to be patient here and manage your risk. Make sure you don't get liquidated. That's it. Just let the market do the rest. Rune, right? This is another one to look at. Rune, lots of M shapes, right? 3-month fair value gap sliced through. You hit 2022 and 2021 yearly levels, right, at the lows. I have got a spot bag of Rune simply because look at the chart. There is no way I'm gonna like not buy spot here. Okay, I have a spot bag. Another interesting thing about Rune is if you take a look at Rune on the log scale, right? So for those of you that watch my YouTube videos, the recent ones, you'd have been familiar with this. For those who haven't, we'll take a look here. Even though it looks confusing, I promise you it's very simple. Macro trend base, macro fib retracement on Rune, 1 to 0, right? You hit the 618, right? This is log 618, way more significant than anything on linear. Okay. Not only that, but for now, if this base is a support, we can see even on the weekly we have aggressive selling going on, right? Even on the weekly, these don't register on the weekly unless there's been huge amount of aggressive sells. But have those aggressive sells been rewarded? Hell no, they haven't, right? So if this is the bottom, then you have my favorite structure to trade. You guys know what this is by now, the smiley face, right? You have an extremely brutal but beautifully painted smiley face here. Cumulative structure. Someone bought, someone deviated, someone offloaded their bags. There was very clear signs of distribution on Rune, followed by a confirmation that nuked you down, right? Of course, now this nuke was very harsh. Wasn't expecting a nuke this hard, but it happened nonetheless, right? The signs of distribution were there. And now you've gone back down to the areas that were originally here. Someone's buying again, meaning whoever's market making this is clearly interested in Rune on this level. So even if we were to get one more drop on Rune, right, this would be still the liquidity rate of the golden pocket right over here. If we were to hit this, right, they would line up with the trend basic extension 87886, line up with the breakout and then retest of this like sort of wedge pattern that you've been developing, right? So I wouldn't be akin, like, if you get stopped at break even here, or if you lose, let's say 80 cents, then you probably get 65 to 64 cent Rune. Now that's fine, right? You just enter there if you get it. Even better entry. Risk management will be very easy, right? Even though the chart will look ugly, risk management is super easy. So look, if you start getting counterbody closes below this, or you have a wick, for instance, right? You have a very clear wick here. If you lose this wick, if this is regarding this entry, by the way, right? If you were to go for a 702, 707 entry, you just cut if you lose 55 cents. That's it. Because below this, you're probably going to go back all the way to 33 cents. I don't know if Rune makes it back alive as a project from there. But over here, you've got chances, right? You've got chances of Rune actually surviving as a project at the areas it's currently at. So, Rune, I've got a spark bag in this. You had a retest of the previous week close, and we can see the retest has been very successful. Right, that 61866 golden pocket lined up with the 764786 deep value zone anyway. So in my opinion, Rune for a spot buy, extremely easy to manage risk. Right, and this was even more so the case when you look at the weekly close. Right, there's this last YouTube video I did, or the one before that, the recent ones. I literally went over this. I said, okay, here's a weekly close. If you get a pullback to that mid, right, that's the whole reason this was drawn on. Just like I've been doing for the rest of this stream. If you get a pullback to the mid of that weekly close and buyers take control, right, which lines up with this 113 level. Let's take a look what happened, right? You broke above, so let's go to the hourly. You got a pullback to the mid, right? Buyers to control. You take action, right? So this was a very nice addition based on, if any of you watched the videos, this was a very nice addition to Rune right over here. Right, and now, locally speaking, high highs and high lows. Of course, this is following a ghastly downtrend, so I won't take this too seriously yet. But you can chop here for sure, right? Following the bad move we've just had. But these are the areas where if you don't buy here, where are you gonna buy? That's where you gotta ask yourself. Everyone was buying Rune up here. Let me show you. If I go back here, look, lows. Everyone was buying Rune at $6. No one wants to buy at 90 cents, right? People want to market short at 90 cents. Make it make sense. Right? It doesn't make sense at all. So Rune is very deep value areas, and if this level holds, right, I do not think Rune is dead as a project, right? You can still trade this. Right? Even if it's not to new highs, even if this never goes back to new all-time highs again, I do not care. Even just local structure, right? So from A to C, from here, where we currently are, let's say back towards A, you're still talking 275% pumps, right? Just to make another lower high. So I wouldn't fade Rune where we currently are, basically. That's the point I'm trying to make. And if we go for intersections, if everything remains bullish, right, and we get a huge move back to the upside by April, 205% very possible, back towards $5.79 on Rune. And another one, Anchor, right, another bullish one in terms of market structure. You have a completed shark. You have a completed shark here, shark 886, shark 1.618. You raided a load of liquidity, and now you're just getting reaction off it. Right, I'd wait until you reclaim this trend as support. But what we do have here on Anchor is, I'm actually going to do this on the daily to make sure I've pivoted everything properly. So I pinned this to this wick here. That's fine. And the second thing I'm going to do is go from here and pin it to that wick there. So we have a liquidity triangle, right? We have a very clear liquidity triangle for Anchor. It's been raided and it's been accepted, right? So basically, if you want to get into Anchor now, 20, 40, 40, right? Actually, not even 20. I'd go 30 or 40% initial, 60 to 70% for DCAs, and you're going to cut if the Shark 86 and the 1.618 is lost, for obvious reasons, right? You don't want to be holding if that's lost, then this probably is resistance as well. I wouldn't want to be holding when demand over time gets turned to resistance. But where we currently are, easy to manage entry, spot entry on Anchor as well. So just a few coins with M shapes, guys, and just like areas where you can manage extremely easily your risk for spot, even leverage if you wanted to, right, for swings. For of course lower time frame leverage, you're looking at going down the time frames to actually look for more local confirmations, right? I'm speaking in terms of higher time frame right now, but you can use the exact same yearly levels, monthly levels, weekly levels, and look for 1 hour candles to if it's being flipped to support, 1 hour longs, right? If it's being flipped to resistance, 1 hour shorts, so on and so forth. There is an order block here, and I would want this to be flipped back into support for a proper size up, right? You're still rejecting off the mid of that for now. The bullish order block has been mitigated for now, right? So you want to see something like this, right? Flip this into support in the future, and then that will send us higher. But that is Anchor, and I'm sure there's a load of projects out there, guys, that I can look at, but I'll look at it over time. No rush for me yet. But let me just catch up with the chat. Let me take a look. Inverted PO3. Yeah, just power of 3 blue. Just is more fundamental. Just going with rules of 3, right? Rules of 3. Things happen in 3. It's just that rule of nature. You can call it AMD model as well. It's the same as a PO3. Basically, accumulation, manipulation, distribution. Now, this is one of the few ICT concepts that I try to utilize myself because it actually makes sense, right? An accumulation followed by a period where you shake people out and then you distribute. That's a phenomenon seen time and time again in the market. Now, I do not know if ICT is actually the person who created this, but many people coin it as an ICT term. One of his only concepts that and high time frame fair value gaps are the only two I actually use. Everything else he does, he's a clown. And inverted PO3s would be the same, right? So accumulation, manipulation, distribution. Your bullish PO3s accumulation, manipulation, distribution. Your bearish PO3s, you have accumulation, you have manipulation, and then you have distribution, just like that. Happens a lot. Yeah, exactly like Rasadi said. Don't if it's your first time around, don't be all in on leverage. ETHFi. Okay, I'll take a look. I'll add that to my list, brother. I'll take a look at ETHFi. Phil, yeah, I was looking at Phil too. 786. Yeah. I just saw that's really nice on MKR. Yeah, 786, 618. Godly target. Yeah, reason to go higher, right? I'll look at Jupe for you, bro. Yeah, so I'll look at Jupe, I'll look at ETHFi, and then yeah, insolvency for that was it. But I think they paused for a while, haven't they? Okay, so I'll look at Jupe, I'll look at ETHFi, and then I'll cut because I've been going on for like 3 hours now. I'm gonna go out for food. Okay, let's look at Jupe first. It's not on focus V2, it's on focus. Holding my latest Jupe airdrop. That's the only Jupe allocation I have right now. Let's look at the chart. I'm looking at this chart in a long time. Yeah, but that will not have played out. So that's, what is this? 1 second. Ah, okay. Get out of here. Get out of here. I mean, I don't think there's anything to worry about on Jupe. You've got a shark. That's a very nice shark at that. Look, X, A, B, C, right? Yeah, D. 1.618 to 86 of the sharks right here. You've hit that. You know, you're still within it. And then you had an insane reaction off it, actually. You're at the B, unless you, okay. Keep it very simple for Jupe. Only get in if this B point gets flipped. That's it. That's all I can give you. If this B point gets flipped, get in. And there might be a Gartley here somewhere, to be honest. Is there a Gartley? 1 sec. That looks pretty deep. What if I did this to this to this? It's a bit too deep. Okay, but 1 sec, 1 sec. If I turn the shark off once before you guys get cross-eyed, and I do this. For me, that is a Gartley. So let's go to the 618. Deep Gartley, maybe? Oh, I need to go over Pepe as well for you guys, since that's something we looked at last week. A lot of those targets have hit for Pepe. Yeah, that's a deep Gartley. Well, close enough to a deep Gartley. 886 happened right over there. As you just have a deep Gartley here for, yeah, so you have a shark. The shark is what I'm going to use as my main harmonic, yeah, but you have a deep Gartley also. There's your 886 following the 618. There you go. Right, in either case, started beatboxing there for no reason, sorry about that. There we go. Isn't it beautiful how TA works out, right? So that area between the 618 of the deep Gartley and then the, you know, the extreme we had for the shark, right? The B point we had for the shark. If I turn the shark back on, right there, that area is the same area where the seller zone was created. Not seller zone, supply zone was created, right? And that supply zone is what you're trying to flip into support right now. So basically what I'll do is, to keep it very simple, since you're currently below this area, if you start getting daily closes above the mid, I'll just start slowly scaling in, and your stop loss in that case is going to be below this wick here. Okay, right there. Otherwise, if you want a safer entry, wait for a breakout and some sort of retest to actually confirm the B point as support there as well. I think that'll happen at some point in the future, and you can do that on the hourly or something like this, right? You can see right now it's not working, but you know, just you're looking for counterbody closes to start occurring above. But right now, as we speak, we might get one more something like this, yeah. So, but this zone basically on the daily, right, on the weekly, so on and so forth, on the higher time frame, so even on the weekly, this is the zone that needs to be flipped to support. So at the end of the day, until you flip back above this level on the weekly, I wouldn't be all in anyway. Right, once you get a weekly close above this, then you're looking for lower time frame pullbacks into this level to size to DCA with basically, or you know, just looking for that trend shift, like I said, to size up on. But this is the area that's make or break for Jupe, locally speaking. Okay. And you know, if this holds a support this time around, I would actually target this, that there, 0.5, basically this harmonic target's right up there. That's going to be a target, because everything else has been taken out, so that's the only target you do have. And same thing, if you break down and you turn this back into resistance, well, you guys know what you're doing, you're taking a short, right? You're taking a short back towards this and back towards the range lows again. But Jupe had interesting areas for sure, brother. Very interesting areas. I wouldn't size up heavy yet, but you know, shoot this daily, for example, close like this, you've got reason to, right? You've got for example, seller's supply zone being flipped into support. That's pretty significant. So yeah, this is your Colosseum harmonic traders. Furthermore, close to an 886, meaning 1.618. perhaps a deep crab in the future at this particular area. This harmonic shape, guys, this right here is called a deep crab. You're looking for an 886 on the B, basically. You're looking for somewhere between a 382 and an 886 at the bottom. So for me, that's, you know, 86 is basically here, right? Liquidity rate 86 was respected, so you know that's fine. And then after that, you're looking for a 1.618, and this has to be between a 2.0 to a 3.618, right? So basically somewhere around this region. Just put the 1.618 down, and then put the 2.0 down. That's going to be your PRZ. Right, that's it. So you have a target back to the upside as well for Jupe. But like I said, don't expect them to play out very, very soon. Traditionally, these harmonics don't play out like ASAP, right? That's actually a rare occurrence. They take time on the higher time frame. So that's Jupe. And then I'll quickly look at ETHFI as well. So I think I have that here. I'm sure I had ETH. No. Okay, master list perhaps. One sec. Where do my charts keep disappearing to? Alright, what should I use? ETHFI. I mean, is this a... Guessing I can use that, but I'll also use ETHFI USD first, Binance and the crypto chart, and then I'll go to ETHFI USDT for Binance, OKEX, KuCoin, Bybit, BitGet, CoinExGate. Where's Mexi? There you go, that's all I need. Okay, let's look what's got the most data. Okay, well this can get out anyway. Not the same thing. Thought it would be. Oh wait, no, this is a market cap. Yeah, market cap. Never mind. Okay, let's take a look. ETHFI. Oh, okay. Okay, I see. There's a big raid. Now let's get this out. No, somehow Binance has more data. So now we're just gonna see where's the lows. Okay, the lows for this is 23 cents. The lows on Binance is 0.24, and on Binance here is 0.23. So let's get rid of U. The lows on here on OKEX is 23 cents, and Binance has more volume. We'll go with that. So basically, I might as well just go with Binance, right? Yep. Okay, so we're going with Binance. So first things first, let me see, what's your macro data looking like? We're gonna go with, you're at the value area low. That's very beautiful, actually. Very easy to manage risk here. How would you do so? Literally, I can give you a setup just based off this. Look at the weekly. Your weekly close is there. I'm interested in the daily then. Here's your current wick, right? And there's your current buyer zone right over there. So that's the area the buyers are in control for this daily candle. Basically, you have this zone right over here between uh, 1.046 and 0.992, right? So let me just actually 1.046. Let's see if I can line it up to 1.046. And 0.992. Yeah, that's fine. There you go. Right, you have this key area right over here. You don't want to lose that, right? So you can chop some more, sure. Right, lose the value, reduce this, but this is the level you do not want to lose. You obviously do not want to breach this either. Any breach of this needs to be accumulative, otherwise that's not going to look good. But this is the level you do not want to lose for now. That's your standard deviation 1. I don't even need to put 2 and 3 down, but I will, just to see, okay, but did we hit any of the second and third standard deviations? Okay, so the dump hit standard deviation 2. Really nice reaction off standard deviation 2. And oh yeah, the bottom was pretty much a perfect standard deviation 3, right? You reached out 3 standard deviations from your Gaussian mean basically to actually bottom out what you did. So you know, that's good. That's really, really good. The fact this held is very, very good. It's very impressive. Now again, if you want to enter spot 20, 40, 40, you can actually do like 30%, right? If you want it over here, you can do 30 to 40% initial buy. Leave 70 to 60% depending on your risk appetite. I personally would cut anytime you get below this, okay? I'm not interested because then, you know, for me, that's a pretty wide range to try and work with, right? Actually, before I say that, let me look at the percentage. It's not even that bad, to be honest, 30%. That's not bad at all. you could actually play the whole range if you wanted to. But I'm not going to do that, simply because if you do that, you're trying to catch a falling knife, right? There's no point trying to catch a falling knife with bids. So I'd rather plan a buy around this area, right? So if you enter here, let's say, since your invalidation is actually pretty close here, you can enter 50% if you wanted to, right? 40 to 50%. So that leaves you, 50 to 60% to DCA with. Split that into two. So let's say you went 50-50, right? Just for argument's sake. Let's say you entered 50% CMP. That means you have 25% to size up with when local key levels get flipped to support. So for example, should you go up and reclaim macro value area high, that 25% goes in there, right? And should you go and reclaim the macro value area high after taking out the last lower high that led to the lower low, then that 25% plus the remaining 25% you add on a trend shift also goes in here, right? So you just have your allocation for DCA slash, entering on a flip of a key level, and your allocation for trend shift left to size up with. And your invalidation is if you lose 0.992 cents, right? So if you, let's say we're looking at the daily, you start getting hourly to 4-hour candles below 0.992, right? You can just cut. And if you really want ETHFI as a spot, you can just hold your bag and open a short to hedge your spot bag instead. There's two different ways you can do this. Many of you might not have considered this, but you can just hedge your spot with leverage, right? So if you're buying here, maybe you want to play this entire range. If you want to play this entire range down to 880, you're okay with trying to play this entire range. If you get below this mid, right? If you get below, you lose value area high, value area low, sorry, and you get below this, you're just looking for signs to short, right? Looking for signs to short. That's it. In fact, if you enter 50% right now, and then you get this move down and a confirmation of this resistance, you can hedge your spot ETHFI bag with a leverage short, right? That covers you when you go down. Doesn't have to be the same position size. I don't care if it's half. You just want to get some money from this so that when you get to your targets, you close that short out and just use that money to then buy more spot, right? So, but your asset area is very, 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 very easy to manage risk, bro. You're completely right. I've not even looked at any wave structures, but super, super easy to manage risk. If you were to do this, for example, what do we have? So you have a 0.5. You definitely hit a 2.0. Yeah, you've hit way past the 2.0. But A, B, C. So let's go for a 0.5 here. There, and then we're going to go with a 2.0. Was the 2.0 respected? Yes, it was, right? Just very beautiful confluence, just with the value area high, basically. There you go. So, more confidence as to why this level should hold, basically, right? But this looks good, bro. This looks good, yeah. This looks really good. In terms of risk management, this looks amazing. So if ETH goes, then yeah, anything on the ETH is gonna go too. For now, I'll add this to my focus too, and I will put that onto Ethereum betas. There you go. Let's put it there because Arb's a shit coin right now. Let's take a look and find the butterfly. Bath is 3 out of 5 now. Deep Crab and Deep Guardian missing. Bullish Deep Crab, bearish Deep Crab, Deep Guardian pattern. Special situation. Yeah, very special situation. Yeah, Coinbase listing, very, very weird. Yeah, for sure. But I think you have plenty of time. You have plenty of time over here. Let's see, right? So from over here. Okay, no, that's too deep. So that means we need to go slightly deeper first. That's a 382. No, this is not going to be a 2.24. Ain't no way. Surely not. Yeah, no, 2.24 would be deeper still. Just in case you got more rates, I suppose. That price there. Yeah. .382. So you'd be looking for. I mean, that is a. If you break all the standard deviations, this would be the next target. So I'm just going to leave this on the chart for now, right? Could very well play out. So you've got an ABCD there, so that's your bigger picture ABCD. So let's leave that for now. What else do we have in terms of ABCD? So we can go from here to here. Perfect. I think we have a 1.618. So we're going to go with a 618 over here. There. And if that's the 618, so the 2.618 would be right there, but the 1.618 is actually, no, we've gone way deeper than the 1.618. If I was to leave the 1.6, oh, never mind. Yeah, no, never mind. That's gone. This is gone. Yeah, that's way higher. I mean, if you ever reclaim it, then you know you have a 1.618 here. But you know that's I'd be looking for fresher harmonic patterns instead. Yeah, let's forget about this one for now. Right. Let's take a look. What do we have? What else do we have? Five, 6, 8. 5, 6, 8. No, not good. Not 5, 6, 8. I'm gonna stick with this for now. Here we go. This for me, this is the area that needs to be held. So 2.0 plus this, that's the area that needs to be held. But yeah, that's very, very interesting. My dupe chart. 1 second. I've not even got. I need to go back to the other one. But there's a lot of coins that are just absolutely amazing value areas right now, guys. Like I said, I've only touched the tip, right? When you scratch the surface, there's a load more I've not even had time to look at yet. So the ones I'm sharing with you are the ones that I've actually had a time to like look at when I was spacebar, and there's loads. You guys know how big my master list is. For dupe, you're wanting this to be flipped to support. Okay, that's it. If this flips to support, the mid holds, and the 12-hour close was a good one, right? But you're rejecting here right now. So basically, where we currently are on dupe, you're wanting a successful lower time frame retest of this to enter. If you start getting like 3 minutes, 5 minutes, 15 minutes flips of this into support, you look for lower time frame entries to scalp this back to the top side, right there on dupe. But let me just go to the daily to actually give you guys the levels. I'm not going to put the long P&L on my chart because the candles that you put your stop loss below, the retest candles haven't printed yet, right? So you only enter after the actual retest candle prints for dupe. But yeah, that's that. But yeah, guys, so this has been a very long stream. Sorry for taking the time, but I appreciate each and every one of you for actually sitting here and giving me a time, listening to me ramble on. I've not ate anything for like nearly 2 days now, just taking my intermittent fasting up a level. So I'm gonna go and break my fast, eat some food, and I'll see you guys in my Tuesday stream next week. I'll probably release more videos until then as well, right? And if you guys have any questions, tag me in chat, right? Just ping me. If you guys are interested in the way that I trade myself and you want to learn, just reach out to me in DMs, right? You can get more information there on my one-on-ones. Otherwise, just catch me in my streams, on my YouTube videos. Sometimes I share things on Twitter as well, and I'll see you guys soon. Yeah, thank you very much for your support. Thanks, Grasati brother, as well, for starting this and always being here, man. But I'll talk to you guys soon. Stay safe. Remember, space your bids out. You've got more time than you think. So I'll stop the recording here.